Good morning and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. We have been discussing the topic audit and auditors. We have made some good progress, and before I start today's session, let me greet those of you who are here. I know you are here because I can see your wishes. Mr. Hitesh Jain, good morning, and Daneshwari, good morning. Sushil Kumar Barik, Memon Rafiq Bhai, good morning. Sneha Gupta, Bandreddy is here. Welcome, sir. And Mr. Aita, good morning, sir. And all of you here out there everybody. And let's move on. So what we did was, we understood appointment of auditors, and then we were discussing removal of auditors, right? We also saw qualifications and disqualifications very much early on, so that we entry threshold level. Though section, I'm not going with the section order, as you can see, because sometimes logical order is there. So we first did qualification, disqualification, etc., etc. Then once you know who is qualified, who is disqualified, we get into appointment, first auditor, subsequent, then removal. So then we saw casual vacancy, right? Under removal, we'll go to removal straight away. That is when you are requesting the auditor to get out. Okay. Opposite of appointment. So we saw cooling period also. I think cooling period is clear to you. There's no doubt. One term of 5 consecutive. There's a cooling period there. Once the auditor is completed his term, 1 or 2 as the case may be, again that individual or firm shall not be eligible for reappointment in the same company for 5 years from the completion of his term. See, there are some confusions, but then the point here is, seriously, if you ask me to explain this, I may not be able to do it. For example, a break in the term for a continuous period of 5 years shall be considered as fulfilling the requirement of rotation. Seriously not aware of what this means. Okay. So this, in fact, one student got confused by this and was asking me a question like this. His question was, suppose an auditor is appointed for 5 years. At the end of the first year or second year, he takes a break, as it is called. And can he be again appointed for a continuous period of 5 years? I think no, because once you are out, you have to wait, a cooling period of 5 years will apply to you. So the whole point of the cooling period is, the student's doubt I can understand, because what does it say? An individual who has completed his term shall not be eligible for reappointment in the same company for 5 years from the completion of his term. Now, so let us say that the auditor has completed 2 years. 2 years. Then he takes a break. For what? For 1 year. Can he be appointed again? In my humble view, no. See, this is my view. Okay, this is where the confusion starts. This is where the confusion starts. This whole confusion is because of this break thing. What do you mean by break? And why would he do that? Because ultimately, what is the benefit for him? So the real point here is, see, suppose he's completed 4 years and then he takes 1 year break. Can he be appointed for immediately again? I don't think so. See, the purpose here is that once an auditor is not there, he has to be out for 5 years. That is a cooling period. So if he goes off in the second year or third year, doesn't mean that he can take a break and then come back again. This is my view. But of course, another view could be there that at the end of the second year, he takes a break for 1 year. Then again, he can be appointed for 5 plus 5. So that is one view. That is not the intention of the legislature. It will be like, I'm giving my opinion here. There could be 2 points of view. Somebody could say, using this clause, Rule 6, he can say, I will take a break. So 2 years he's an auditor, then 1 year alone somebody comes in, then again he'll be appointed for 5. Or if it's a firm, for 10 years. But what joy, I seriously don't know, except that he's getting 2 years extra with 1 year gap. So, whatever. So maybe if you do that at the end of the 4th year, then 1 year you take a gap. Then it will be. But then the word term has to be understood, because cooling period operates once he's completed his term of office. So what is a term? I'm sorry, I'm keeping on jumping from here to there. I just want to show you this. An individual auditor who has completed his term, that is one term of 5 consecutive years, shall not be eligible for reappointment in the same company for 5 years from the completion of his term. So I think the intention here is you should complete one full term of 5 consecutive years. Somebody who goes out in the middle, takes a break and comes back can be appointed for another 5 years or 10 years. This seems to be the intention. This is a loophole in the provision. So again, you should distinguish between rotation of auditor and rotation of partner. Partner rotation within the 5-year period or 10-year period, sorry, not 5 year, 10-year period, the members may resolve that the audit firm, the auditing partner should be rotated within, say, every 3 years or 2 years like that. They can say that. There is only rotation of the partner. Whereas rotation of auditor, okay, is there only for certain companies, not for all. Not for all. So, see, for example, where the company is not a listed company or a company which is satisfying one of those criteria that you saw, you can appoint a number of subsequent body. You appoint once for 5 years, then again for 5 years, then again for 5 years. You can go on. But if it's covered, if that company is covered by the provision, then he cannot be appointed. Once he's completed the 5 plus 5, 10, the firm cannot be again appointed for 5 years. That is rotation. This is where a break in the term for a continuous period of 5 years shall be considered fulfilling the requirement of rotation. I seriously don't know. This is subject to confusion. According to me, there is an anomaly, or there seems to be I'm of the view that there is an element of, what shall I say, conflict here, or there is an element of, ambiguity here. Okay, an ambiguity. So once the provision is ambiguous, I suppose interpretation is possible, as you well know. One interpretation could be that he can take a break after the 3rd or 4th year or 2nd year, 1 year break. Then again he can be appointed for, the firm can be appointed for 10 years, or he can be appointed for the individual 5 years. It's one view. I'm not questioning that view, but I'm saying MCA has to give clarity on this. But another view, which is my view, is no. The term over, he has to be out for 5 years. Then only again he can come back. This is my view. It is up to the ministry to take the. But then the view that after 2 years he can take a break and come back is pretty much beneficial to the auditor, because he can take 2 years or 1 year, 2 year, 3 year, 4 year, whatever. But 5 years, if he does it, gone. Because if he completes 5 years, then gone. See, that is how my logic works. See, at the end of 1 year, you are saying I'll take a 1 year break and come back again. So can I say that at the end of the 5th year? No. So if you want to read both these provisions in conjunction with each other and consistently, then you can always argue that 5 years is the term. After that, he cannot be appointed for 5 more years of cooling period time. But suppose he goes off at the end of the 4th year and takes 1 year break, he can again be appointed for 10 consecutive years. Then if somebody does this, that's a loophole. Yeah. Is that the intention of the legislation? Okay. That's all he needs to do is 1 year. Again take it back. Again 10 years. Then again one year. Maybe not 10 years, 9th year. 1 more break. Is that the intention? If that is so, then I think this is a serious anomaly in the law. And that needs to be, MCA either needs to amend the rule, make it clear, or needs to give a clarification. In the absence of which, definitely there is an ambiguity in this place. Because some of you could have got that question. See, what happens, many students ask questions very intelligently. And these questions are shared by the Board of Studies with faculties like me, who are asked to give answers and all. But then sometimes the law is so confusing and like this, thanks to the MCA, that we can only give opinions. We cannot give answers. So let us see what Pooja PS has to say about this. Even though take a break without completing 5 years, we are deemed to have completed therefore the normal rule of cooling period still applies to him. He works in 21, 22, 23 time period. So absolutely, Pooja madam, this is my view also. You have in fact stated my view. But unfortunately, there is an ambiguity here. Therefore, when there is an ambiguity, 2 views are possible. Who can settle it? Either the court can settle it, or in this case, Ideally, the ministry itself, having created this anomaly, can settle it. But assume there is an ambiguity. Those of you who might have this doubt, I have done my best to explain the provision, tell both the views. I cannot give an answer here. Or if you are very particular, then adopt Pooja's view, which is also my view, and be happy with it. Okay. Now this brings me to another important point, which is in legal paper, law paper, it's quite possible that given a set of facts and the law as it is, there could be two views. Okay, your question as a student is very clear, sir. All this is not my problem. If there are two possible ways of looking at it, what do I do in the exam hall? I'm totally with you. Now, I don't know about what you will do or what your mindset is, but I can tell you what I would like to do in those situations. I would write both the views. Why not? Hey, you are writing a professional exam, yeah? This is not some, matriculation 10th standard or 12th standard exam or even a university exam where there is only one answer that is given in the textbook and that answer only should be written. Otherwise, you will know. See, this is not that type of a schooling system or a education system. You are going to become a member of our institute. So you should be able to look at both the views, explain both the views, and then maybe you can, like what I did now, you can give both the views and then say, according to me, this is the correct view. Then, see, that is why I'm saying MCQs are dangerous. This argument cannot be given in MCQ. Whereas in a normal written paper, I have the ability to argue. I can say this view is there, another view is there. According to me, this is the correct view. Conclusion. Examiner will believe me for that answer, you get full marks. You will not lose because it's only when you take one view and stick to it and it is wrong that you could be in trouble in MCQ. Whereas here, this should not happen. Because I have given both the points of view. Naturally, the facts are given to, sometimes the problem in the exam could be vaguely stated. That is again a crime. I'm sorry to say this, but sometimes the problems are vague. Vague in the sense they do not mention certain points, whereas that is needed. Sometimes when students raise questions they send to the institute, they will simply send 2-line question. Now, to answer that question, further questions have to be asked. What is the correct? The facts have to be correctly given. Within that framework of facts, an answer would emerge. But if the facts are not fully stated, then as an intelligent CA student, you are expected to make assumptions. You could make assumptions, but document the assumption. You mention clearly, it is assumed that, and write what you are saying. Subject to that, then you give the answer. Nothing wrong. See, this is how professionals will think and work. Only student level thinking would say, I need an answer, sir. I want an answer. Okay. Sometimes it's quite possible because as you get into income tax and all that, you will find, see, tell me one thing. The CBDT has one view. They give certain views in the law, as per the law. But you need not accept it. Yeah? The CBDT may have a circular. Definitely it is binding on the officers. But you as a professional can have another view, which means for the same given situation, there are two views. For example, classic example is section 14A, read with rule 8DD of the Income Tax Act rules. So, consistently, we have held one view, department CBDT had one view. Went all the way up to Supreme Court and the decision is in favor of the assessee. So, such things are there. I know, maybe as usual, I am telling things that may not be useful or useless things, but think about it. Change the mindset, change the thinking pattern. Of course, see, when you have to give 2 points of view and all, sometimes you might find it difficult to express it. That's okay. Try your best. Moving on. So we saw all this. We came up to retiring auditor. Let's quickly go through it. Then before we go on, if you want to remove an auditor before the expiry of term, you know the provision. You've seen that. Now, you want to remove the auditor at the AGM. Means you want to expressly resolve that the retiring auditor shall not be reappointed, or the retiring auditor shall not be appointed and somebody else should be appointed in his place. So, for both these things, special notice is required. You know special notice very well. I am not going to explain special notice again. If you want, you can go through the notes I'm giving you. Special notice has to be given by the members to the company. So, this should be given 3 months before or at minimum 14 days before the clear days before the meeting. Not earlier than 3 months, not Not you can give 3 months before, up to 14 days you can give. Now what happens? The members are receiving the AGM notice. They are also getting the notice. They are seeing the thing. One of the item, appointment of Mr. ABC and Co. as the auditors of the company. Auditors who are retiring are eligible for being reappointed, and the board recommends that they be reappointed. Now you are a member. You feel angry. You're saying ABC and Co. useless. No. I want XYZ and Co. Chalo, no problem. Provided you satisfy the membership criteria. You should hold not less than 1%. Either you or together 5 of you should hold not less than 1% of the total voting power, or shares on which an aggregate of not less than 5 lakh rupees has been paid up on the date. Either or has been paid up on the date of notice, whichever is less. Suppose the company has a huge paid up capital, it's enough if people holding 5 lakhs come, even though they may not be 1%. But suppose 1% is less than 5 lakhs, 1% is enough. Whichever is less. So if you are satisfying that criteria, then you can send a special notice where you can say, we are hereby informing you that, or we hereby give notice that the following resolution shall be passed. And then you give the resolution. What is that? To appoint Mrs. XYZ and Co. instead of ABC, the retiring auditor. So appointing a person other than. Or you can say, we don't care who you want to appoint. You appoint anybody, boss, but not ABC and Co. The retiring auditor shall not be reappointed. Okay? This is it. Now, the company should in turn has a duty to give notice to the members at least 7 days before the meeting. This is part of 115. When you get a special notice 14 days before the meeting, the company should give a notice within 7 days. Where it is impracticable, not practicable, you can publish it in 2 newspapers and all that. In addition to giving notice to the members, the company shall forthwith means immediately on receiving it. Immediately, little better than immediately. You are given at least another half day's time. But by the end of that day, it should go to the auditor. Send a copy thereof to the retiring auditor, who shall be entitled to make representation in writing of reasonable length. Similar to the right of the auditor when he is being removed before the expiry of term. You should be given a reasonable opportunity of being heard. Reasonable opportunity means he should be allowed to write in writing, and also he can come and address the meeting without prejudice. This is a reasonable opportunity. What is reasonable length? You can prescribe 2,000 words, 3,000 words, whatever. Okay. Suppose he writes pages and pages, 57 pages of complaint. See, remember, you may not send it to the members, but he can have it read out at the meeting. Okay. If it is of reasonable length, then you have to circulate it to the members, if so required by the auditor, unless the representation is received too late. See, you give it to him 7 days before, right? Along when you send the notice to members, almost immediately you send it to the auditor. Auditor will send, but suppose he's thinking, consulting his lawyer and all, and finally, 1 day before the meeting, you get it. But today, with electronic media, digitalization, even that can be sent immediately. Okay. And the notices given by the company to the members regarding this matter should mention the fact of receipt of the representation, that such and such a representation has been received from the auditor. If you are not circulating it, but if you come to the AGM, we will show it to you. Like that. See, this is a very serious issue. Either way, the retiring auditor is not going to be reappointed, somebody else. Why do the members feel that way? What was the failure of the retiring auditor? Like that. So it's okay. For the record, before one of you asked me a very practical question, is there any practical situation where it has happened where the retiring auditor has not been reappointed or somebody else has been appointed at the AGM by giving special notice? To my knowledge, I have not known, sir. 33 decades I have been practicing, as I am keeping on telling you. I have not heard of even one case anywhere in India. But if there might be, but the provision is that no member will do this. Simply the directors want to, for them, it is simply a matter of talking to that guy and requesting him to resign or informing him that, sir, next AGM we will not be reappointing you. Then the audit also, so that will be done very, very smoothly. So that in the original AGM notice itself, they will mention it. so-and-so retiring. In the place of the they are retiring, you are appointing so-and-so. Matter over. Okay. It is only when the members are quitting, it becomes a problem. Okay. Usually what they will do is they'll ask the retiring auditor to resign and the new auditor will be appointed. And that is how it's done. It's done. That's the best way to do it also. We resign for personal reasons and he comes in. I give my report to the MCA and go. Or he gives his report and goes. No problem. Okay. Fantastic. Thank you for confirming that some of the information I'm giving is useful. Thank you. Yeah. Now, as I already mentioned, the auditor, without prejudice to his speaking at the meeting, can ask that the representation shall be read out. He can also speak. But be careful. As I already mentioned, I think this has been already covered by me last time, but I'm just going through it again to casually enter into it. So remember, the meeting of a company, you should remember this. The annual or any meeting, not just AGM, EGM, any meeting of a company is a privileged occasion. It's called a privilege. This is part of the law of torts. You know, when a person makes an false comment about another person, it is called defamation. Defamation is a tort, T-O-R-T, tort. Because, see, when you take away my things, when somebody steals my watch or my pen or my jewelry, there is a loss. But the loss is of personal property loss. Okay. But when somebody steals my reputation, something greater is lost. I can earn my money back. I can buy the jewelry again. I can buy the watch again. But my reputation, once gone, cannot come back. So if somebody is damaging that reputation, I have the right to take action against him. In civil law, I can claim damages. It's called defamation. If it is spoken, it is called slander. If it is written and published, it is called libel. Libel, whatever you say. So, whatever it is, such those cases, you can file a suit. But the defense for or exception for tort of defamation is privileged occasion. When a person is making a privileged communication privileged communication is different. When a person is making a statement in a privileged occasion, then even though he might make statements which are defamatory, he cannot be sued by anybody, the other person. It's very important. For example, ministers of parliament and the legislative assembly enjoy absolute privilege. That is called absolute privilege. Whatever is spoken in the parliament, in the legislative assembly, even though it may be defamatory or not supported by evidence, and it may be reported in press, still, the member of parliament cannot be sued for it. Of course, they misuse this like anything by abusing people, using vulgar language, and in certain states, they even remove the dhoti and all that. The point here is that right is available for a very important reason. Because the Minister of Parliament is nobody but a representative of the people. Now, there may be something going wrong in his constitution, wherein some collusion is there between the IAS officers and the police officers, and something bad is going on there. Now, he has to report it to Parliament, bring it to the attention of the people of this country. When he is trying to do that in that capacity, as the minister representative of the people, he is given a certain privilege. That is called absolute privilege. Similarly, a person who has been accused of a crime, defending himself in a court of law, enjoys absolute privilege. In his own defense, even though he may not have evidence, that one opportunity is given to him to why did you do it? He can stand up and say, I did not do it. It is a framed case. That fellow is doing it. All that. Now that can be reported by the press. Still, that person enjoys absolute privilege. All this is not relevant for you. But why I am giving it? Because you should understand absolute privilege. Now you look at the auditor. See, the auditor is going to be removed by the members or by the company itself. Now when he is at the AGM, now he might want to, see, there might be that he was not cooperating with the directors. Now the directors want to appoint somebody else who is more amenable to them. Now if that is so, the auditor is given an opportunity to come and make comments. Sometimes he may not have evidence, or he may not want to share that evidence before the members, but he can say the managing director is a fraud, The managing director is a crook. He has created bogus companies. These companies are providing services to this company, and money is being siphoned out in this way. When I started asking questions, now they want to remove me. Okay, I'm qualifying the audit report. So next year they don't want me, they want somebody else. This, after all, the members are entitled to this information and bound. They have a duty to listen to what this guy is saying. And this man, auditor, has a duty to inform them. Where a person who has a duty to make a communication is making it to people who have a duty to listen. Where the person who has a duty to make a communication is making it to those people who have the duty to listen. That occasion is a privileged occasion, but it is not absolute privilege. It is qualified privilege. The auditor has only qualified privilege. He can go, see, unlike the Minister of Parliament who can talk any nonsense, auditor cannot do that. He should limit himself. Which is why, suppose without, properly talking about the issues, the auditor simply keeps writing, the managing director is a fraud, he's an ass, he doesn't know anything, he's a donkey, like that, keep on repeating. There should be some, see, you are giving some real information, you don't have evidence, that's okay. So slightly defamatory. But this is abuse, yeah, where he's simply abusing that fellow, the MD, by vulgar abusive words. Such cases, the person who is aggrieved or the company can go to the tribunal and say, sir, we want to remove this man. He is writing like this about me. Please, this cannot go to the members. Should I send it or not? So the tribunal may be satisfied on an application of the company or of the aggrieved person that the rights conferred by this subsection. Now understand what rights they are. Qualified privileged rights. It's a qualified privileged occasion. And he has a right. That right is being abused by the auditor. In fact, the words used in the old law were abused by the auditor to secure needless publicity to a defamatory matter. The MCA, they don't like English, so they removed it. Maybe the guy who drafted the section didn't understand what it was all about. But then it's removed. But that's okay. The word abuse is enough. Where the rights conferred by this subsection are being abused by the auditor for securing needless publicity to a defamatory matter, then needless is an important word that has been left out there. See, when will it be? When he is making a valid comment without proof, okay. But if he is needlessly using vulgar language, then the tribunal can say, no need, the copy of the representation need not be sent and the representation need not be read out at the meeting. But still, he has the right to be heard orally. He can come to the meeting and talk. At that point in time, if he is abusing, then the chairman has the control. The chairman has absolute control to evict him from the hall also. But on the other hand, if the auditor is a highly intelligent person and he is able to show to the members that, see, because of my work, the fraud has come out. Now this gentleman they are trying to remove me, okay, or rather not appoint me. See, the beauty of it is, he may not be continuing, but the press will get it. And if it is a listed company or even a large unlisted company, the matter will become public information. And then onwards, it's a different story. Therefore, the directors will be afraid. So, in fact, this part of it is good protection for a retiring auditor because he has the right to talk and he can put it. Anyway, see, this has happened in many cases where when I was auditing, I would have found something wrong that year. What happens is I will go to the board and I will inform them, this is what is happening. I have to qualify, or else I give them the option also. You correct it. Then at least I can have a chance that I can think about it, but stop doing this and correct it, bring back the money. Then maybe we can talk about it. Even then, this year I can't. Things like this keep going on, at that time, that's what I'm saying. At that point in time, the directors will come to me, MD, etc., will call me, we'll have a discussion. Even I don't want to fight with these guys, yeah. So, rightly or wrongly, I have selected this company for audit. I have taken up the audit. Now I realize that I made a mistake. And ethically, I'm not bound to, I don't want to be that. I don't want to do that ethically. So that is how I feel about it. What I will do generally, I will not wait for all this special notice things. And I will simply give my resignation and go. That's all. Let the new man who's coming take that. In fact, there was one company, which could not get another auditor when I refused, because it was so clear. Okay, of course I will also communicate it to the auditor, right? As part of the thing, when he communicates to me, the new guy will communicate to me, right? Informing me that he's going to be appointed. Do you have any objection? I will say, boss, I have no objection in terms of fees. I've got my fees, and this year anyway, I'm not taking it. But last year, everything cleared. But these points I have raised, kindly put it into your audit program. Address it when you are auditing the company. So that fellow will now be in deep shit, because fellow professional has documented and sent him a mail. Tomorrow, if any professional misconduct is happening, this will be an evidence in itself. That look here, another professional told you that this, which is why this. Actually, these are great checks and balances, and the role, which is why the role of an auditor cannot be so easily underestimated in today's financial world. Those of us who are doing our job, we protect the investors and the shareholders, because it's not so easy to remove. Unless the auditor is an abusive person, arrogant, cantankerous, wasting time, asking unnecessary details, abusing people. In such cases, sir, absolutely no problem. The company has the right to use 140 subsection 4, read with 115, rule 24, to give a special notice. And one question you might have: suppose the directors want to remove the retiring auditor, to appoint a person other than the retiring auditor, should they go through 140 subsection 4? The directors want to do it. The answer is yes. If you want to appoint a person other than retiring auditor at the AGM, or resolve that the retiring auditor shall not be reappointed, which obviously they won't do now. When the directors are going to do it, they will appoint a person other than the retiring auditor only. In those cases also, the director should give special notice and then send it to the members. Representation, auditor is allowed, everything will go on. Which is why even board of directors may not want to go through this route. They would rather fall at the feet of the auditor, beg him and say, boss, we selected you wrongly. We honestly felt you are a dishonest man, but you are now unfortunately honest. Let us go. We will go to somebody else who is willing to help us. Kindly let us go. Give a resignation. I'm telling practically. Practically. But legally, if you want to appoint a person other than the retiring auditor, then, or the express resolve that the retiring auditor shall not be reappointed at an AGM, then you have to go through 140 subsection 4. Interesting section, I thought I would. So here is the gentleman, Mr. Nityanand, is the current auditor of Mrs. Delight Food Products Limited. He is retiring at the next AGM, when he would be completing 2 years since his first appointment. No problem. He has not completed his entire time. The company has a paid-up capital of 5 lakhs consisting of 50,000 shares of 10 years, 10 each. Members holding 700 shares have sent a special notice in accordance with section 115, proposing specifically that Mr. Nityanand shall not be reappointed. Okay. Now, the board, I think there is one confusion here. 2 years, if he is going to be removed 2 years, then it's a different provision. This is 2 terms. Since his first appointment. If it is not a listed company or a company covered, he can be appointed any number of terms. So now his second term is coming to an end. Okay. Nityanand is current auditor, his second term is coming to an end. No problem. He is not, the company is not bound by rotation of auditor rules. The company has a paid-up capital of 5 lakhs consisting of 50,000 shares of rupees 10 each. Members holding 700 shares. 700 shares. Okay. Means 70,000 worth of paid-up capital. Have sent a special notice in accordance with section 115, proposing specifically that Mr. Nityanand shall not be reappointed. So the board complied with section 115, and at the next AGM, Mr. Nityanand was not reappointed, and in his stead, Mr. Brahmanand was appointed. Sorry. And in his stead, Mr. Brahmanand was appointed. Mr. Nityanand claims automatic reappointment under section 139. Examine the validity of this argument. Any answers? Is it valid? Okay. Some questions have been asked there. 3 decades means 30 years, not 33 decades. Did I say 33 decades? 3 decades. 3 decade means 3 into 10, 30 years, more than 30, 35 years actually. I qualified in 1987. My COP is from 1987. I hold a certificate of practice in 1987. From day one, the minute I qualified, I got my certificate. But then I was working in Pricewaterhouse for 3 years. Then I quit. And then I started my practice sometime in 91. So that way you can come. But then continuous practice from 1987. Anyway, so, but why sir, Mahadev Bharadwaj, I don't know, why sir for what? Don't put like that in a query pad. I will not know what you are asking about. Can a director be an auditor? No, you already saw. Can a director be an auditor, Hitesh? You tell me. You should by now know. It's one of the disqualified. He can't be, a director cannot be an auditor, yeah. Hitesh, I want you to confirm that you have understood the point. The question is, the problem is, your question is, can a director be an auditor? Why should I answer that? You should know the answer by now. No. And can he also be retired? I don't know about that. What are you asking? Director is different. Director provision is there in another section, not in your syllabus. There, directors also retire by rotation, etc., etc. There, similar provision is there, special notice, etc. So, auditor, how can the director be an auditor? You tell me, Hitesh. I expected better from you, Hitesh. Absolute, yeah. That is, see, the purpose of this is to. I already explained now. These are situations where the person should be given an opportunity to talk freely. So, only then it is called absolute privilege. I gave you 2 examples. Absolute privilege. Okay. Once the meeting starts, the chairperson is in control. He or she has the complete power to control the meeting. Any decision taken by the chairperson, certain matters they may want to put it to vote. That's all. But if the auditor or a director or a member is creating disturbance and behaving in an unparliamentary manner, absolutely they can have bouncers to send them out. I have done it once in one AGM when I was there. I have advised the chairman, sir, please have a security guard. We are expecting certain people to create problem. They came, they created a problem. Immediately they were collared by the security guards and thrown out under the instruction of the chairperson. Chairperson has full control. Okay. Auditor has qualified privilege. I already mentioned it to you. Auditor has qualified. Why not absolute? Because absolute means nothing. He can talk anything. Which is why many ministers of parliament, MLA and all behave badly in parliament. You might have seen. They will remove the dhoti, shout, use a vulgar language, use local language and all and talk. That is, they are misusing, but then that's absolute privilege. Same thing auditor cannot do because he is having only qualified privilege. He cannot abuse it. Okay, good. Auditor is a qualified. Mostly in case of private company, member may be closely to promoted director. How they will favor? See, you cannot, relative cannot be. I think you have totally forgotten disqualification sections. Okay? You should not be a relative within the meaning of the Companies Act. So, close relative. Yeah, why not closely related? Can be. So long as the members are happy, what is the problem? See, in a private company, one thing you should understand. In a private company, who are the members? Again, same family, na? So they are happy. So our cousin is only doing it, no problem. They can appoint. Such cases, except that the auditor should not be a relative of a director or an employee. So then it will be a problem. Other than that, if so long as there is no direct disqualification, sometimes. So how they will flavor, what is it? Flavor auditor opinion. Could be influenced. It could be influenced. Agreed. Could be influenced. So long as they see you, my humble request is read the disqualifications again. If that person does not come in this disqualification area, then close relative and all is not defined in income tax. For example, cousins and all cousin once removed, okay, or uncle's son, my mother's elder brother's son, he's my relative, but not relative under the Companies Act. Can be appointed. Why not? Okay. I'm not saying it's right, wrong. I'm saying it has to be seen in case-to-case basis. Because see, there are cases where close relatives may be honest. Okay, like, we have Vidur. Examples like that. Vidur was a close relative of Dhritarashtra. own stepbrother, direct relative, okay, under the Companies Act. But Vidur gave good advice to Dhritarashtra. So there is relationship is not the problem. Is that relationship being used to corrupt the situation? In which case, as a member of the institute, that gentleman should think, though he is my cousin, should I do it for him? And if he helps the cousin, then gets into trouble, then that he will go to jail. That's all. Nobody can prevent it. Yeah. Since members have more than 1% of the shares, so Nityanand, absolutely. Check whether everything is covered. 115 is covered. Members are 70,000 rupees. 1% is only 50,000 rupees. Right? So 70,000 is more than 1%. And the board has complied with 115. And at that meeting, the members have removed Nityanand and appointed Brahmanand. Absolutely valid appointment. There is no issue there. One more thing. Ordinary resolution. See, here it is special. Before expiry term, special. But at the AGM, when you are appointing a person other than the retiring auditor, it is ordinary. Okay. So, no, actually, that's why if you notice, Raghavanji, if you now notice the screen, you will see I have changed the 2 years. You are right. Your understanding is correct. But I have changed it to 2 terms, not 2 years. Okay. So with that, I think it is now answers. Madam Kiranji, you wait for the end of the session. Around the end of the session, I will be speaking about internal audit. I think we have completed internal audit we already completed last time. Yes, anybody can be. Cost accountant can be an internal auditor. Company secretary, I don't know, can be. Advocate, we already saw this in the last class. So, is there any need for them to be? No need. He can be a member of the certified, he can be a certified internal auditor, CIA, no problem. For internal audit, no. But for tax audit, specifically the Income Tax Act defines that only a member of the Institute of Chartered Accountants have taken sign. GST audit is not there now. One question was asked whether an audit, the statutory auditor can be the GST auditor. He can be. Okay, he can be. And for that, again, it has to be a member of the Institute of Chartered Accountants of India. Certain things clearly the circular or the act or the other law will clearly say chartered accountant. Where it says chartered accountant only. But where they are willing to look at other cases. See, under MCA, many forms and certificates can be signed by all the 3. Okay, all the 3. Chartered accountant, company secretary, cost accountant. So, certain audits, like internal auditor can be anybody. There again, the rules will apply. See, the internal auditor also, you cannot, the ethics are there. Every cost accountants have ethics. It's not as if they don't have any ethics. And company secretaries also have ethics now. It's not that they don't have professional ethics, code of conduct. They also have a code of conduct. They should also work within that code only. If a group of people do not have a proper code of conduct, then they are not fit to be called a professional. That is the real check of a professional institute. Do you have a code of conduct? Do you commonly obey all that? Do you have clarity? These are all hallmarks of a profession. Absolutely. One can continually be a company. If it's, so long as the company does not come under the rotation of auditor guide rules, then you can be. There is an element of familiarity threat. Absolutely correct. Absolutely correct. But it is not prohibited. You have to be careful. That's all. There is a familiarity threat, no doubt, but you have to be careful. Okay. See, our firm has been auditor for a company for 50 years now. Because my father was the earlier auditor. Then when I took over and certain reasons they came to me, then, so perfectly all right. The MD, we know each other. And one of the most ethical companies. And in fact, the MD's first question to me would be, Srikanth, what is the law? Are we obeying the law? That's the first question he'll ask me. Even smallest issue notice comes, he will call me for a meeting and, Srikanth, what is the law? Are we following the law? That's the first question he'll ask me. If in case we have done a mistake, immediately correct it, pay the penalty, whatever it is, and finish it. If by some mistake of my people, Even small error is there, correct it. And whatever has to be paid to the government, pay it. Or whatever has to be done, correctly do it. Comply with the law. Such a company, we have been there for 50 years. So, where is the familiarity threat here? In fact, if I point out even the smallest thing, they'll correct it. So, it all depends on the company. It all depends on the management. It all depends on them. So, it's not that familiarity threat is there only when the fellows are crooks and the auditor is well known. Suppose the company is an honorable company, as I gave you example, and the auditor is also never willing to compromise on ethics, then what is there? See, yeah, there's a chance of familiarity threat. I totally agree with you. But my dear, that's what I'm saying now. From bookish approach, you read familiarity threat in auditing. I'm very happy that you know it. But with a pinch of salt. Okay, with a pinch of salt. See, Satyam case happened because of familiarity threat. I'm telling you. Satyam happened because of familiarity threat. Because at that time, rotation was not there. And auditor was in, 100% I'm of the view that without knowledge, how a man can audit, yeah. Without knowledge of such a fraud, without auditor's knowledge, it cannot happen. That is a classic example of familiarity threat. Sir, 1% of share capital is 1 lakh. How do you say? Raghavan sir, you want to relook at the screen again and correct yourself? 5 lakhs, sir. 1%, 50,000. Maybe it's my arithmetic wrong. Can you confirm to me? Okay, moving on. Now this is another beautiful Satyam fallout of Satyam. Removal of auditor in cases of fraud. See, the Ministry of Corporate Affairs is so clear that fraud will not go away. That fraud will be there. They are happy. They are not saying fraud should be eradicated. But they are saying if there is a fraud, then first catch the auditor. Remove the auditor. Put him in jail. Okay. So for that, they created an extra section. Seriously, this is not needed because already you are having serious fraud investigation office. Already, and there is a penalty. And you are having NFRA, visa NFRA, who will take professional misconduct action against that fellow. And they will literally, after that, once it's done, he'll be debarred. The institute will not keep quiet. They will also debar him immediately. In addition to that, they are saying we'll remove him. Why remove him? Yeah, you central government can. So they are giving a power to the central government, to the ministry, to remove an auditor. Now, who can do this? Tribunal only can initiate this. The tribunal, on its own motion, or on an application by central government, or on application by any person concerned. Okay, so tribunal can do it on its own, or on application by central government, or on application by any person concerned, may be satisfied that the auditor has directly or indirectly acted in a fraudulent manner or abetted or colluded in any fraud by or in relation to the company or its director or officers. So, auditor has acted in a fraudulent manner means he has done something that is he himself has done it. For knowingly a certified false certification given, knowingly. For example, the company wanted to claim some benefits from the government. Though they are not eligible for it, auditor has given a fraudulently has said, yes, they are eligible. Whatever. Or during the audit, he came across a fraud. Okay, he kept quiet. That is called abetting or colluding. In Satyam case, I would say colluding. The auditor colluded with the company. Colluding or abetting. See, you know that there is something wrong. You should have made further inquiry, but then you honestly, whatever paper he gave, fixed deposit receipt, you saw it. I think you didn't bother to go. And of course, I'm informed that the bank confirmed it and all. I'm sure a more serious investigation with the bank might have revealed a totally different picture. See, Satyam printed false fixed deposit certificates because they control the bank's software. But I mean, the bank is there, yeah. You can go to the bank, ask them, find out all sorts of, but the fraud was too deeply laid fraud, beautiful fraud. That way, Satyam as a case study should be read again and again to find out how a company can completely falsify its records. They have bogus invoices, bogus employees, bogus expenses, PF is paid, and everything to show a higher profit than which is normal. Anyway, so the tribunal is satisfied that the auditor has directly or indirectly acted in a fraudulent manner or abetted or colluded in any fraud by or in relation to the company or its director or officers. Then the tribunal may direct the company to change its auditors. Okay. The removed auditor shall not be eligible to be appointed as auditor of any company for 5 years. Okay. And shall be liable for action under section 447. Remember, 447, fraud with a huge penalty. The removed auditor shall, so this way, once a person is removed under 140, subsection 5, he will be, in addition to institute debarring him, he cannot be appointed as statutory auditor of any company for 5 years and liable for action under section 44. See, such a provision was not there when Satyam scam happened. So they realized that, hey, we have no way to do anything about it. If at all, only the institute can do. We cannot control this fellow. Of course, they can take criminal action against him, along with which is what they did. And they arrested that gentleman and put him in jail. Now, so the point I'm making is, they have powers. Yeah, it's not as if they don't have, but still they want one more so that they can show their power and come and remove the auditor. And he cannot be appointed for another 5 years and liable for action. Okay, but then remember, this power is not with the central government in the terms of regional director or ministry. This power is with the tribunal, which is a quasi-judicial body. Therefore, it will be a judicial proceeding, which means the auditor will be given a reasonable opportunity of being heard. The tribunal will not pass an order to change without calling the auditor and giving him one chance. But obviously, they have some evidence with them, right? And remember, once this subsection is triggered, that company is in deep shit. Already investigation will be going on. Serious fraud investigation office will be sitting on their neck. And MD will be in deep shit already. And the press would be aware. Stock exchanges would be aware. The share price would have plummeted. I mean, in that bloodbath, the removal of this auditor is nothing. It's just a side story in the totality of the news item. Okay. Incidentally, the auditor has been removed by the central government. That's all. Matter over. Because the bigger thing would be the MD. He'll be arrested. And all that, it will be flashed. And the price of that company share will plummet. Plummet means drop. From high level, suddenly it will drop down. And all that will happen. That is the reality. In that 140 subsection 5 is a small story, sideline story. Auditor being removed. But then they want to take that revenge on the auditors. You see, how you can do this? We will punish you. We will also punish you like that. Anyway, if tribunal is satisfied within 15 days of receipt of application, it shall order that he shall not function as auditor and CG may appoint another auditor. This is for where immediately it is better to change him, then the CG will appoint another auditor. Okay. When the application is made by the CG, suo motu and any person, no. But when the application is made by central government, the tribunal is satisfied within 15 days of receipt, then immediately they will say he will not function and central government will appoint another auditor from the panel. They have a panel of auditors from that they will appoint. In the case of a firm, the liability shall be of the firm and that of every partner of liability for what? Liability under 447. See, 447 is a penalty. And so when the penalty is there, the liability shall be of the firm and of every partner or partners who acted in a fraudulent manner or abetted or colluded in any fraud. So the firm may have 5 partners. One partner would have done this. That partner is liable. Firm is also liable. Okay. But the other partners are not liable. Okay. Or in relation to the company or its directors or officers. And auditor includes firm of auditors. So this is again a knee-jerk reaction. Because what that firm which was affected in Satyam did was to quietly sideline the auditor and say, we have nothing to do with this. It is all that guy who did it. No, don't come near us. But then the central says, we don't care. You are the firm. Under your banner only you operated. You are also liable. Which is why today, post Satyam, the awareness of professional liability insurance has come out. So many big firms, who are auditing high risk audits, they take what is known as professional liability insurance, so that the insurance company will compensate them for any such things. Okay. But again, that can be only for civil liability. When somebody sues you, I doubt if the insurance company would bear the criminal liability, but it depends on what the insurance company is willing to do. They might also pay the penalty also, part of the claim. So this provision is without prejudice. The word without prejudice means in addition to. You already studied it in interpretation of statute, so I don't have to tell this to you. But for those of you who don't know what it is, the provision without prejudice means in addition to. So this provision is in addition to any action under the provisions of this act or any other law for the time being enforced. Please understand. Because suppose the auditor has behaved in a fraudulent manner, he can be proceeded criminally also. And under the Indian Penal Code and CRPC, criminal proceedings can be initiated. This is in addition to that. In addition to criminal proceedings, he can be removed and shall not be eligible to be appointed as auditor of any company for 5 years, and will also have to pay penalty under section 447, fine and imprisonment. Do you remember? I'm sure you have the 447 slide with you. I shared with you in prospectus. Keep it with you. And good. This is a nice provision, but I doubt if. But anyway, let's look at it. Mr. Paramanand, the auditor of Fly-by-Night Operators Limited, discovers that the directors have quietly siphoned away the funds of the company through false bills and unauthorized fund transfers. He colludes with the directors and issues a clean audit report for the year 31st March 2019. Examine the legal consequences of such collusion. See, this is not a problem question. In the sense, this is a theory question disguised as a problem question. Okay. The answer should be this. This slide is the answer. That's all. Okay. An application may be made by central government or any member, or by the tribunal suo motu may take up the matter, and the consequences. Tribunal will finally pass the order and all. Complete your right. Okay. This is a theory question disguised as a problem question. Be careful. Sometimes in the exam they will ask, it will look like a problem. Okay. It will be given some names, will be given something. But finally see the last line. If you say examine or discuss, then that is automatically a theory question. Whereas if they say, is this valid? Or is the argument correct? Or like that, then that is a clear problem question where you have to analyze it, come out with an answer, apply the law, conclusion. That format will be there. For this, the format don't use it. Rather, say the consequence of the legal consequences of the are as follows. Or proceed with the answer. We now move on to resignation of auditor, which is once an auditor resigns, right? We already saw where the auditor resigns, remember, he cannot be reappointed by the board. Okay. If you remember, shall we go back and quickly have a look on resignation so that you will. Casual vacancy by way of resignation. Casual vacancy due to resignation. Approval of members is required at a general meeting convened within 3 months of recommendation by the board. And that auditor who is appointed in the casual vacancy will hold office only till the conclusion of the next AGM due to resignation. So, of course, at the next AGM, the new guy can be appointed for 5 years. Okay. Now, once an auditor resigns, right, he has a duty to file form ADT3. Okay. ADT3. Who has to file? The auditor. Company can also file auditor. But better to file it. Insist that it is filed. It should be filed within 30 days of resignation. Right. Obviously, the ministry is asking one question. Why are you resigning? Any specific reasons you want to share with us? This is an opportunity for the resigning auditor to inform the MCA about any discrepancies. But rarely will it be used. So this is, but again, this is the strengthening of the auditor according to me, because now this Form 883 becomes an important weapon in the hands of the auditor. He can say, look here, if you do not comply with the law, then I will resign and I will give this information through Form 883. So some amount of clout he can have with the client. The client has to do what it says. To be filed within 30 days. Okay. Now, in the case of a government company, Form 883 should be filed with the Controller and Auditor General, the company, and the registrar. Whereas other than government company, it should be filed with the company and the registrar. Means it should be uploaded in the MCA website. Clear? This is very simple. In case the auditor does not, in case the auditor does not do it, if the auditor does not comply with the provisions relating to resignation, he or it means the firm, shall be liable to a penalty of 50,000 rupees or an amount equal to the remuneration of the auditor, whichever is less. And in case of a continuing failure, with further penalty of 500 rupees for each day after the first, during which failure continues, subject to maximum of 2 lakh. I'm sure your institute material also will be having 2 lakhs only. But if it is having 5 lakhs, be careful. It has been changed to 2 lakhs. Okay. In case some of you are using an older version, just be careful. It is now. No, don't say sorry and all, Mr. Raghavan, but be careful. That's all I can say. In the examination, be careful. I'm more concerned that you should not make similar mistake in the exam hall, because there, it's a different story. Which is why, again, 1% of 5 lakh is 5,000, not 50,000. I'm also sorry. Good. Whereas this, in that example, 700 shares into 10, 7,000. Okay. More than 5,000. Good. Fantastic. See, one thing is, when you are making such mistakes in the exam, so long as the answer is right, they'll give you almost full marks. But answer is wrong, then it's a different argument. Is wrong. No, I'm sure it is 2 lakh, because the Board of Studies study material has been extensively revamped, up to date. The only thing is, some of you might have downloaded an older version and you might be having it. For them, I'm saying, don't. My suggestion, go to the Board of Studies website. See, that way, Board of Studies of the Institute of Chartered Accountants of India is the best today. Telling you, it is the best. The materials are very user-friendly. They are downloadable in PDF format. So, Gen Z, I'm sure you don't know how to read a book. I'm sure you've not seen a book. So most of you are more into electronic media and digital and all that. So they have given you a PDF option. You just download it and read it and things like that. So you should, my suggestion, get the latest one. Download it and use it. So moving on, now onwards, you see the density. See, we are now moving away from, shall we say, important topics to not so important topics. The density is more there. Disqualification, appointment, cooling period, rotation, resignation, all that. Removal before expiry of term, removal at an AGM. Okay, be thorough. Regularly repeat. But other topics are also there. We have to see that. We'll see. And then we have cost audit. So remuneration for an auditor is fixed by the company in general meeting. But of course, the case of the first auditor, the board is appointing, right? When the board is appointing the first auditor, they will fix the remuneration. After that, subsequent auditors, it will be fixed by the company. Of course, the company can pass a resolution delegating the power to the board, saying, so-and-so B and is hereby appointed as auditor of the company to hold office from the conclusion of this AGM till the conclusion of the AGM in 5 years later, and at a remuneration to be fixed by the board in consultation with the auditor. That's all. That is also allowed. Or you can fix it and say, give him 5 lakhs, 10 lakhs, whatever you want to say, you give it. Remuneration shall include facilities and expenses incurred for audit. Because what will happen otherwise, see, suppose I'm taking an advance for, I have to go to a factory and audit. You are having a factory in Varanasi, I have to go all the way there. See, I'm not doing it for my joy, boss, and for you I'm going. So out of pocket, whatever I spend, you have to pay me. So the company has to pay me. So that is all included in the remuneration. Which means, suppose I take an advance, it may not amount to being indebted. Because I'm taking it against expenses for remuneration. Similarly, remuneration advance can be taken. What is that? I can take an advance. Sometimes I take some work, I prefer to take advance because we don't know, this will all come, especially consulting assignments, will come to us, spend 2 hours, 3 hours, giving all scenario this way, that way. So we will literally go through 5 laws and then give them solution covering GST, income tax, company law, FEMA, everything we'll put together and give them a solution. Now, I'll tell him, boss, you have stated a problem. Preliminary, I have given you some ideas, but no, sir, we need more. I will give you. First you pay advance, then I will take. Okay, sir. Immediately the fellow will get a check, and then the discussion continues. Then, because later on he will take all the ideas and go away, and then who will pay me? I mean, this may sound a little mercenary, but be practical. This also is important. Being ethical is one thing. Not being concerned about money is another. Be concerned about money and your income and all. Okay. Don't be unethical. Don't be avaricious. Don't be greedy. Don't think money is the everything in life. Money is only an instrument, a tool to enjoy life. If somebody is earning money and storing it and investing it in the share market, huge thing, but he's living a very useless, without any values, without any, not enjoying anything, no aesthetic sense, nothing. What use is that life with all that money? He cannot enjoy the beautiful things in life. Then why are we even bothering to earn money? What do you say? I've seen people like that. They have a lot of money, but they can't. In the morning, they'll get up, go to office, sit, work, time, 8 o'clock, come back, maximum weekend party. That's all. And one fine morning, cardiac arrest, put against. That's all matter of. For that, you're not, that is not the reason for God creating you with all these faculties. That is all. Other than that, you should be concerned about remuneration, etc. It is a part of after all, that is our livelihood. Institute does not permit me to do anything else. So what I earn from this only is to feed me and my family, etc. So remuneration shall include facilities and expenses incurred for audit. See, here again, you will find this is linked to auditing paper. There again, you will find some issues are there in auditing also. Remuneration shall exclude fees earned for any services offered at the request of the company. So in addition to statutory audit, he may render other services which are not prohibited. Be careful. Anything prohibited under 144 he cannot do. But other services are there. For example, tax audit, GST audit, consulting, tax consulting, legal consulting, anything. Except prohibited services he cannot render. Other than that, everything can be done. Consultation is allowed. He can come to me and get an opinion. I can give. That is not prohibited. Okay. So all that is not included in remuneration. The reason they give this clarity is as you are aware, in the balance sheet, notes on accounts, you should disclose the remuneration paid to the auditor. Okay. It should be disclosed in the notes on accounts so that any member can go and see how much the auditor is getting. Check out. Those of you who have got a balance sheet which you are now currently reading, check out. Locate where the disclosure is made about the audit fees and find out how much fee has been paid to the auditor for expenses, for actual fee. They'll give very clearly, they'll give the breakup. They might even give other services also. They might say they will give, but it is not included in remuneration under the Companies Act. Luckily, they have not put any limit on remuneration and all. Don't even give that thought to the MCA. The other houses will put some limit. Only so much you have to pay based on paid up capital, based on whatever. They will give all nonsense. They net worth and all that. Don't even give that idea to these fellows. Because, see, chartered accountant charges the fee on the basis of the complexity of the activity, the time spent on it, and value of his time. Based on that only you have to bill. So in those cases, net worth may not be the clear indication. There may be huge net worth, very little work. But there may be small net worth, but huge complication will be there. Audit will be there. Transaction volume may be high. So it is left to the auditor and the client to decide what will be the fee. It is a contractual thing, negotiable. What you cannot do as part of your professional ethics is, when Mr. A is the current auditor and he has charged a fee of X, you cannot take the audit by giving a lower fee quote. That's called undercutting. You should not do that. Okay. It's a professional misconduct. Okay. Obviously, if you want the auditor to conduct the audit, he shall have a right of access at all times to the books of account and vouchers of the company, whether kept at the registered office of the company or at any other place. So, he has the right of access at all times to the books of account and vouchers. So, but having said that, today, access to books of account is no longer physical access. It is logical access or virtual access. So, all of us, not only me, everybody, all of you, I'm sure you don't go to the client's place to audit. You don't have to. If you are getting view access to his SAP or his ERP, more than enough for us. We just plug in, we can take it out and we can query it and we can. But after that, what happens? Now, I may want to see some of the physical vouchers. Then only we have to go. During pandemic, even that we did online, work from home. My people were sitting in their Zoom meeting, all of us will come. Client also will come. Then he will take out the vouchers and show it to us. We'll see it. We should bring it near and all. We'll see. But that's not satisfactory. Because sometimes. So once the pandemic got over, slowly, we are going back to physical verification mode. But that's again 3 days, 5 days maximum. The bulk of the work will be done online and remote. Yeah. Thank you, Ms. Neha Gupta-ji. And so practically in AGM, nothing is done. The negotiation, if any, will be already done by the board of directors. The negotiation of, if at all, even to use the word negotiation is not fair. The auditor will be consulted as to what could be a reasonable fee for the activity proposed. He will give his quotation and then the quotation will be approved, or there may be some request for a change in the quotation. Finally, one quotation will be given, approved. Then the fee finalized will be given in the resolution for the members to decide. If the members don't want to fix that fee, then they can. But I rarely see. In fact, by and large, they give that power to the board to fix. It is the board which does it. At the AGM, nothing will be done. Yeah. There's simply that resolution will be proposed to appoint so and so XYZ and Co as the auditors of the company for blah blah blah. At the remuneration to be fixed by the board of directors. All those in favor, everybody, pass. Okay. Engagement letter is not okay. Before you take up an assignment, not only statutory audit, any assignment, the client should issue an engagement letter to you, which is very important. There's a standard format for it, but the main crux of the engagement letter is terms of reference, scope of work. As far as statutory audit is concerned, scope of work cannot be limited by the client because here we are bound by the statute. But even then, an engagement letter is good, clearly laying down the terms and conditions, rights and duties of the parties. It is a contract. It is issued by the client to us, and then we accept it, and we keep one copy, we give him one copy. So the relationship from now on is controlled by the engagement letter, the terms of reference. This is very important for other assignments, mainly for non-statutory audit assignments, non-statutory work, tax audit, where there may be different expectations. The client may have one expectation, we might have another expectation. So that is there. Similarly, that engagement letter may have some conditions as to time and duration of audit, when the audit should be completed, etc., etc. So that's a contract. We agree. Once I sign, I'm bound. Okay, it's like a contract between the client and the auditor, company and the auditor. It's called engagement. Very, very important. It's an important document in the audit trail process, audit review process. So we have to maintain it. Please do have a format with you once you start practice, and ensure that after some time the client, as your familiarity and all, even then every year, please ensure that the engagement letter is obtained, filed and kept in the file, client's file, or in the folder in PDF form. Auditor charge fee in thousands or lakhs. I cannot answer this question. Let me assure you that it is based on the client's work and the complication of the client. So, when you're doing your articleship with a chartered accounting firm, I'm sure you will come to know about how the fee is fixed and all that. Okay. Not that I'm not refusing to answer, saying any answer I give will be inadequate. Kindly find out for yourself by joining a firm as an article clerk. Automatically you will learn everything from your senior. That is part of the education process of the institute. So in addition to coaching, whatever, the articleship is one important method by which our students learn. Okay, they learn through articleship. So please do not skip articleship or try to do some nonsense of dummy, bummy and all. Go for a good firm, not necessarily a multinational firm. Even a good local firm can give you good exposure. A good chartered accountant, a good senior can be a mentor to you. He can guide you, she can guide you. So take that opportunity. Don't miss that opportunity. Qualification is only 25% of your work as a chartered accountant. It is a 3 years articleship period which will give you 75% of your practical knowledge. People who skip articleship by some means and they cleared the exam with a rank or even first attempt and all, when they come for the interview, shaky, very shaky, because they don't know many things. When you ask a very practical question, but ask him from the textbook, he'll mug up and vomit. Like IAS exam, they will give mug up and vomit, rank. No, there should be practical knowledge will be very less. For those who have skipped articles or inadequately, attended articleship work, or casually they've gone there, not engaged themselves in the audit process or work, been casual, they go early, come late, go early. Those people, you can see them. We will know who did articles well and who did casual. From the way they talk to us and all, we know. Remuneration includes shares, debentures or property. No, I cannot be a shareholder. How the company can give me shares? The minute I get the share, I'll become disqualified. I cannot hold even one share or debenture. Okay, but property makes me think. Share or debenture, you forget it, because if I hold a share, I'll become disqualified next time. Okay, at the minute I go, the share is registered in my name, debenture is registered in my name, it's a security. So normally we don't take in-kind payment, but property, sometimes, we might take it in kind. Fees may be taken in kind. I may ask him to give me, suppose it can be done, in which case, 194R has come for that only. 194R has come for that, so that when you are receiving your any perquisite in kind, it will be taxable. Okay, fees, but I have rarely seen this. And I will never do it. I will never take a service or a goods or services from a client, even at arm's length. Or maybe once in a while at arm's length, yes. Means whatever the price charged to other people, will charge me. I will pay. Because the quality may be good. Some cases are there. Some clients, their product, I like the quality of their product. In which case, I will tell him, cut the bill and I will make the payment and I will take it. Without paying, I won't take it. So this is my view. So in kind, I don't know. Property, etc. It's a good question, but I don't see it. Why not? Holding company can appoint separate auditor for subsidiary company. Why not? Same firm can be, or same auditor can be. Another auditor can also be. Why not? And it is not the holding company which appoints. Be careful. Holding company cannot appoint auditor for subsidiary. Who appoints? The members of the subsidiary will appoint. But in that case, the holding company is a majority member. But please understand, the English is a very powerful language. The way we speak is important. The auditor is appointed by the holding company as the majority shareholder in subsidiary, not as the holding company. There's a subtle difference. As a member only they are appointing. And who has the right to appoint the auditor? Shareholders. It so happens here, this fellow is the main shareholder or the only shareholder. And therefore, they appoint. But very, very legal point. I will not countenance a statement like the holding company appoints the auditor of a subsidiary. No. The members of the subsidiary appoint the auditor of the subsidiary. It so happens the holding company is the majority shareholder. That is all. This may sound very, very, what shall I say, argumentative to you, or odds are you are making such a big difference in this. It is. A student of law should be very careful in using words. Okay? Very careful. It's like, it's like a sharp-edged blade. You should be very careful while using. See? Carefully you should do. So that the sharper the sword, the careful you should be in dealing with it. Because the slightest flick will cut. So words are to be used like that. With razor's edge, you have to use the words. Once you become expert in that, the skill of language, use of language, believe me, the way your career will jump will be totally different. It's only when we are not able to use language with like a sword, wield it like a sword and be able to use it so accurately. You should be able to pinpoint one part and then go and hit that and then come out like a fencing. Only then you will be. Please don't think I'm wasting your time by giving this input. Start using the language like that. Suddenly you'll become interested and you'll become an expert in the use of language. Okay. This applies to vernacular also. But then English or vernacular. Even in vernacular, you have to be careful while using your language. Because when I'm speaking in Tamil, if I want to communicate something, many times I address audiences in south of Tamil Nadu or below Chennai part, where I speak in Tamil. I speak in Tamil in public speaking in Tamil. I'm very, very careful while speaking in Tamil. I use pure Tamil. And I use every word that I use in Tamil. I never use an English word. For every English word, I use a Tamil, equivalent Tamil word only. But I'll be very careful while speaking. Right? Good. These provisional audit also, no matter, we are seeing Companies Act, Kusunji. Whatever you are now discussing is applicable only to companies. Individual HUF, etc., they can appoint. There's no such stringent rules are not there for firm, individual, HUF, etc. Such stringent rules are not there. But there again, a member of the institute should be guided by the institute regulations, ethics, code of conduct. Even while accepting the audit of an individual or a non-corporate entity, still you should abide by the institute regulations. But Companies Act won't apply. Companies Act apply only to companies. Okay. So how it will apply to HUF, etc. Right. Now, while I am auditing the books, I might find that on the bare, scrutiny of the voucher and the ledger entry, I'm not able to understand. You see, you're saying that you spent this money for giving a party in a star hotel. Voucher is there. You have produced the hotel bill. Voucher is there. Authorization is there. Everything is there. But why did you do it? For what purpose did you have this meeting at the hotel? That is not there in the voucher. Nothing. Then I will ask for information and explanation. Okay. So that then that has to be given to me. That is the documentation. So they will then say, sir, that was a high-level meeting with the vendors. High-level meeting with the customer, where the customer, we have invited our leading customers for a meeting at the Star Hotel, where we have gave a presentation of the products and we also gave them dinner. Chalo. Now I can accept it as a business expense. Give me some more proof. Show me some proof that happened, photographs and maybe a mail sent to the customers and their responses, etc., etc. So this is what we mean by informational explanation. So I have to go beyond that and ask and ensure that is documented. That is auditing. Okay. I'm only giving you one example. There are many, many examples I can give you of where you have to go for information and explanation. You have to go beyond the facade of the transaction and the voucher to what is it that motive? How do you justify it from the point of view of the company? Of course, I have to stop there. Beyond that, I cannot go. I cannot question the board why you are giving such costly meetings for customers and all. That is not my. All I have to satisfy is, was it done for customers? Was there a business promotion there? Is it properly supported by vouchers? I'm happy. I can go on. Beyond that, I cannot go. I cannot question the decision of the board. But I can definitely ask for information and explanation as to why this is justifiable and allowable as an expense for the company. Similarly, fixed assets. Something may not be in the name of the company, but they may have built a building on it. The land may be in somebody else's name. So I can ask, what is this? Have you got a lease on that land? Can I have a look at the lease agreement, land lease agreement? How long is it? So these are all information explanations. In fact, this is that part of the audit which is audit. See, the word audit, A-U-D-I-T, audit, is an English word that has its root in the French word audir. The A-U-D-I-R-E, audir. Audir means to hear. Audir is to hear, not listen, hear. Audir. Use audio. See, all that comes from the root audio. So audio system, auditor. Auditor's job is to listen. Hear. You tell, I will listen, document. So an audit is a process of listening to the client and asking. It is not a mechanical process of, vouching or just going there and going into the SAP and looking at it and using a beast, or a cat, computer-assisted auditing tool to sort of, that is all. We use all that because of the data volume. But at the end of that, when I get the analysis, on my query, once I put in a query and I get my answer and I see the evidence, then I have to apply my brain and ask, what is the pattern emerging here? Is it correct? Or is there something wrong? Should I go deeper than this? That is the art. There, auditing is not a science. Auditing is an art. And it comes with practice, not with books, textbook, bookish knowledge. It comes with practice. Okay. The auditor of a company which is a holding company shall also have the right of access to the record of all its subsidiaries. So please note, holding company auditor has the right of access to subsidiary and associate. Reverse not possible. Subsidiary cannot ask for holding. Holding can ask for subsidiary. Why? Because later on, when the consolidated financial statements are given to him, he has to certify it. Of course, individually the subsidiaries also will be audited. And that is only going to be consolidated. But still, as the auditor of the holding company, he can have a look at the subsidiaries' records and associate companies' records, insofar as it relates to the consolidation of its financial statements. Okay. To that extent, I can ask for it. How are you consolidating? So, to one item they are adding, so what is this item in the subsidiary? I want to see. I can see. I'm entitled to see. But I cannot conduct another audit of the subsidiary. No, because that is already done by somebody else. At the time of consolidation, if I have a doubt about a line item, I can definitely ask them for further details of that line item. Right? So, this part of it is part of your auditing paper also. Therefore, I'm going to give it a quick look and go on. See, this 143.1 is an inquiry. Please note, the auditor should inquire. That's all. There's no reporting commitment here. He just has to ask whether loans and advances made by the company on the basis of security have been properly secured and whether the terms on which they have been made are prejudicial to the interest of the companies. They should ensure that it is not prejudicial to the interest of the company. Whether transactions of the company which are represented merely by book entries are prejudicial to the interest of the company. See, most transactions recorded in the books will have either a cash or a bank, link. So somewhere they will get hit, or there may be invoices or purchase. Some document will be there to support it. Some business transaction will be there, and which I can verify through some record, voucher, invoice, bill, whatever. But suppose only book entry is there. And no problem. Book entries are allowed, but you should know what it is. And is it in the interest of the company or simply you are passing some book entries? Many accountants, and I hear non-chartered accountant, people who are handling books of account, they don't know what is a journal entry. Simply they will pass a journal entry, thinking that journal entry, you can't debit and credit. I have one case where one engineer, she was using a popular cloud-based accounting software. And that software permits anybody to come and do anything. Owner can himself maintain accounts like that. And so this lady goes and we get the accounts for audit and I see share capital has been debited. Share capital has been debited. Hey, what's happening here? Now only the company has started. This is the second year of audit. I'm taking up. First year, some problem was there. They came to us. So second year, no wonder there was a problem. This type of accounts, how it will be. So share capital debited. So then I called the person. She's an engineer. Director, and I asked her, Madam, share capital debitor. Yes, sir. The 3 rules of double entry. What is it? See, engineer, she read the 3 rules of double entry. Now she has understood it, I believe, and she's back. Sir, it says debit what comes in, sir. Share capital has come in. Therefore, I have debited. He said, Madam, please, I cannot educate you on accounting because a person takes a whole lifetime to learn the subject, whereas you think by just reading through Google, you will be able to become an accountant. No. So please give it to a professional guy who knows what they are doing and allow them to maintain the books of account. Please don't. I asked her in one way, Madam, will I do coding or will I presume to build a bridge just because the information is available on Google? No. I have to go through a process of qualification, right? Somebody who's either even a non-chartered accountant is a professional, okay? And he's got some knowledge, he's got some experience, and he knows what he's doing. So that give it to him. So I told them, hire an accountant. No, sir. We are Zoho. We can maintain on houses. Please, if you want to do that, then let me go. I'm not going to be the auditor for these accounts. Okay, like that. Just to give you example how book entries and all are passed blindly without understanding what she is doing it. Okay. Where the company not being an investment company or a banking company, so other than investment or banking company, where assets consist of shares, debentures or other securities have been sold at a price less than at which they were purchased. Okay. So basically, investment company or banking company, as part of its regular business, will buy and sell shares. Investment company, its main business is purchase and sale of shares, securities. So they may make a loss in the normal course. But suppose your business is not investment or banking and you sold shares at a loss. See, these are inquiries, that's all, right? Whether loans and advances have been shown as deposits. See, as asset side, the reason is deposit has some sort of a better connotation than loans. They won't ask. Whether personal expenses have been charged to revenue account. You have to just ask. Later on in CARO, you will also confirm that it is not there, but here you have to ask. Whether it is stated in the books of documents that any shares have been allotted for cash, whether cash has actually been received. Okay, where you are saying you allotted shares for cash, whether cash has actually been received. Okay, so sometimes for money laundering purposes, they might use public issue and all have been misused for money laundering, where numerous people, they will pay cash and we will allot shares to them. Whether cash has actually been received. Sometimes without receiving cash, they might pass entries in the books. All that I have seen it happen. Cash will not come, it will go out, expense will be shown, and capital will be built that way. Okay, I've seen it, but you have to ask. Now, the auditor, while making the report, shall take into account the provisions of the Act, the accounting and auditing standards, and matters which are required to be included in the audit report. Which is why engagement letter for a statutory audit can maximum only mention this. The audit shall be conducted in accordance with the provisions of the Companies Act, the applicable accounting and auditing standards, and other matters which are mentioned in the relevant rules and all. That's all. The client cannot say what I should see, what I should not see. Only the Act will decide my ambit, and the accounting and auditing standards decide my ambit. The client cannot decide. Whereas for other audits, for example, they want us to do a fixed asset audit. We only verify physically fixed assets and report on the thing. That is the assignment where specifically terms of reference can be given. I can do it. For what he wants, I'll do it. That's a separate assignment. Can be done, not prohibited. Okay. Under the provisions of this Act or any rules made thereunder or under any order made under Section 143(11). So, the auditor expresses his opinion on the accounts and financial statements. At the end of an audit, the product is an opinion that the accounts reveal a true and fair view. He shall express an opinion that according to him and to the best of his information and knowledge, the said accounts or financial statements give a true and fair view of the state of the company's affairs at the end of the financial year and profit and loss account for the said year. Or such other matters. This is all known to you. I don't want to waste your time. Okay. In his audit report, he should also mention that he has sought and obtained all the information explanation which to the best of his knowledge and belief are necessary. This is the catch. Suppose tomorrow something comes out, some expenses are being built bogus. First question is, did you get all the information? Here is continuously this company is giving a party in star hotels. Okay. Did you ask why? No, why should I ask? Voucher is there. No. Did you go one step behind it? Because all these are parties given by the MD to his friends. Nothing to do with the business. How you missed it out? So he has to say, I have sought obtain all the information and explanation to the best of my knowledge and belief are necessary. Okay, for the audit. If in case he has not done it, he has to give. I have not asked about these matters because I'm afraid of the MD like that. You have to give. I mean, silly. The idea is you have to. Whether in his opinion, proper books of account as required by law have been kept by the company so far as appears from the examination of those books. Okay, now this is where I told that lady, madam, in the audit report, I have to mention proper books of account. This is not proper books of account where share capital is debited. Sorry. Please go give it to a professional accountant. Ask him to maintain proper books of account, produce it for audit, then I will audit it. And proper returns have been received from branches. Okay. Sometimes, I insist that the branch should be audited by me or by a local man because I can't rely on the return alone. That also power is there. We'll see that. Okay. Anyway, the time now is something like 8:35. I'm going to call for a small break, a very small break, 5 minutes. We should be back. Biology break. Maybe grab a cup of chai, not more than that, and sit in front of the computer again, or whatever, mobile or whatever, laptop or tab or whatever. And so don't go away. 5 minutes break. Sir, 5 minutes ka break. Welcome back from that very short break, more of a biology break than anything else. So, continuing with our discussion, see, from now on, it's all pure theory. It's already, and much of it is, I'm sure, known to you from your auditing paper also. Okay, so whether the report on the accounts of the branch have been received by the company's auditor. Okay, so branch audit, he should confirm that the branches have been audited and I have received that and considered. The opinion or the inputs given by the branch auditors have been considered in my report and dealt with in my report. See, especially if you're doing a audit of a public sector bank, you will know that there will be central statutory auditors, who would be the auditors, 3-4 people. Some of us will be appointed as, some of us will be appointed as branch auditors for the various branches. So we will submit our report not to the main auditor, but to the, not to the company or the shareholders, but to the main auditor, who will in turn go through the reports. If any major discrepancies are there, it will be considered in his main audit report. Of course, if there is something major, then he will himself come and see. So he will, if I am reporting some really major mistake in the accounts from the branch, then he will himself come and see it. It's not as if he will only take my view, but I would have alerted him and I would have told him, look, this is what it is. Whether the company's balance sheet and P&L account dealt with in the report are in agreement with the books of account and returns. Very important. Okay, which is why while signing the audit report, the balance sheet and P&L, while signing the balance sheet and P&L, just check out in the printed accounts of whichever company you are seeing, you will find this is the balance sheet referred to in my report as of even date. What do you mean this is the balance sheet referred to? Because when I'm physically signing the balance sheet, I know the numbers are right. The numbers that I saw in the ledger are here. My team has confirmed it. Everything is confirmed. Audit is over. Ledger balances have been extracted. TB, from the TB, I have prepared the balance sheet and P&L was prepared and I have audited it. And this is the balance sheet referred to. I have signed physically. So physically signed a copy, I am going to sign and give it to the auditee. Auditee, the directors would have signed and given to me one copy. Now that also I will sign and keep with me. So that tomorrow, if some falsification is done by that company and some bogus balance sheet is prepared and then they put signed so-and-so and they send it and there's an inquiry tomorrow and the ministry comes to me and says, what did you do? What are you signing? Wait a minute. Show me that balance sheet. I don't know what this is. But look here. I have got a signed balance sheet. Those two fellows have signed. MD has signed. Director has signed. Can you see it? Can you see my signature? This is the balance sheet referred to in my report as of even date. Please take it. And don't ask me about all the nonsense that he has published, putting my name falsely, for which I may take action against the director for professional, slander and all. For spoiling my reputation, I will take action against them. But you go, now this is the balance sheet referred to in my report. This is the balance sheet I audited. Now, if it is not with him, find out what happened. But it is with me, see. This is very important. Which is why physical copy, we always take signature and keep it. Of course, today, it is also going to have a DIN and UDIN. So, protected, but still, that this is the balance sheet referred to in my report as of even date is very important. Whether, in his opinion, the financial statements comply with the accounting standards. Here, this is where you can qualify and say if it is not complying. Again, you can qualify here also. Finally, we'll qualify. This is when you're talking about true and fair view, you can say, subject to the following, the accounts reveal a true and fair view. Like that. Whether, in his opinion, the observations or comments of the auditors on financial transactions or matters which have any adverse effect on the functioning of the company. See, this is an opportunity for the auditor to share. Okay, most of the time there will be nothing. This will be blank. Whether any director is disqualified from being appointed as a director. See, this is being given to the auditor. I have to verify whether all the directors are qualified. To understand this, you have to understand 164, which is not in your syllabus, so don't worry about it. Okay, just like auditor has disqualification, directors also have disqualification. Under that 164 subsection 2 is a special disqualification where the company has defaulted in payment of repayment of deposit, debentures, payment of dividend, etc. And 1 year has elapsed from the due date, then the directors will become disqualified. Like that, there is a separate section 164 subsection 2, not in your syllabus. But we have to verify whether this company will come under that category and report. So that, once he is disqualified in this company, then he will be disqualified in all other companies where he is a director. We have to verify whether any director is disqualified under 164(2). That's all. For that, what we do? We have to verify where or he is the director, all that nonsense we have to do. But we have to report. Any qualification, reservation, or adverse remark relating to the maintenance of accounts and other matters connected therewith. So this is where you qualify. You say that we have got this. Whether the company, you'll study more about qualification, reservation, adverse remark, etc. in auditing. So here I will not waste your time with this. If you want to know more about it, I'm sure the auditing faculty will give you more than enough information on clean report, qualified report, disclaimer, reservation, adverse remark, highlighting. All that will be discussed in detail in auditing paper. This has a close link with auditing paper. Whether the company has adequate internal financial controls with reference to financial statements. See, the preparation of the financial statement itself needs internal financial control, whether that is there, and operating effectiveness. Okay. So it's not only enough to say it is there, you should have trail, you should have clear trail, which is why, there should be an audit trail now. The financial accounting software in electronic form should also have audit trail. Do you remember? We mentioned it when we spoke in accounting topic, accounts of companies, we mentioned that. Such other matters as may be prescribed, you know that. Under this condition only, they prescribe CARO. Where any of the matters is negative or qualifications, you should give the reason for the same. Okay. Also, where 143.3i, 143.3i, for the purpose of 143.3i, for the financial years commencing on or after 1/4/2015, the report of the auditor shall state about existence of internal financial controls with reference to financial statements, provided that the auditor of a company may voluntarily include the statement before also. Okay, on or after 1/4 and ending on 31st March. So, voluntary. From 1st April 2015, it has become mandatory. 143.3i became mandatory from 1/4/2015. So now it's not, it's mandatory. A private company is exempted from 143.3i, provided it is an OPC or a small company, or if it has turnover of less than 50 crores, or it has aggregate borrowings from banks, financial institutions, or any body corporate less than 25 crores. Okay? Then it is exempted from 143.3i regarding internal financial controls. See, the idea is simple. Where there is a large organization, there is a bigger scope for fraud. So there is a need for financial controls in the preparation of financial statements. So for private companies, they feel the threat is not there. Therefore, they exempt private company, provided they satisfy these criteria. Okay. There is something called the company's audit and auditors rules, in which the auditor's report shall also, there they have mentioned this. In addition to what was mentioned in the section 143.3, in addition to that, the rule 11 of the company's audit and auditors rule says the auditor's report shall also include their views and comments on whether the company has disclosed the impact, if any, of pending litigation on the financial position. See, anyway, we will be reporting it in contingent liability. But they also we have to confirm that it has disclosed the impact, has made provisions as required under any law or accounting standard for material foreseeable losses, if any, on long-term contracts, including derivative contracts. See, Derivative contracts are a complicated area. Don't even ask me to explain what it is, please. Except that they are contracts and that they can result in a loss in future. As of today, you cannot book anything, but future, because the strike date will be there. On the strike date, you do not know what it will be. But today there is a loss. Then you have to make a provision. Depends. You have to comply with the accounting standard and the law. It's a very, very thin legal area but it's very complicated. If a company is dealing in commodity derivatives, it's a specialized area by itself. Audit of commodity derivatives, securities, derivatives, and options, futures, and all. You study it in finance. See how they are all closely linked. Finance topic. There's a corporate finance, again linked here, derivative contracts. As an auditor, you should ensure that any provision need to be made has been made, and you have to confirm that in the report. Has delayed in transferring amounts required to be transferred to the IEPF by the company. Go back to your dividend topic. There you would have studied that if the dividend is remaining unpaid or unclaimed, you have to pay it within 30 days. On the 30th day, it is remaining unclaimed or unpaid. You have to transfer it within 7 days to a separate bank account. From that account, on the expiry of 7 years, you will transfer it to the IEPF. You know the rule. So whether the company has transferred correctly to the IEPF, you have to tell. Whether all the amounts to be transferred have been correctly transferred. Has it provided requisite disclosures in the financial statements as to holding as well as dealings in specific bank notes? See, this is very particularly for that 1 year, 2017 March, when, rightly or wrongly, our country went into what is known as demonetization, and the certain specific bank notes, namely the 500 and 1000 rupee note, were made invalid or not legal currency. So that has to be reported in the statutory audit report for that year. This is very specific to that 1 year. Okay. See, what happens is during the period, 8/11 to 30/12, many companies would have accepted SBLs. So there are certain rules. Some companies should not even accept after 8/11. There was a separate ordinance for this. So anything, it has to be disclosed. Whether if the company has got, we have to disclose. That is now closed to subject. Unless the demand comes again, in which case again they have to include it. Okay. See, MCA is capable of putting one more class. Yeah, they will put like this. Sorry to say, they will put like this. Whether the auditors report, whether the company has disclosed the impact of pandemic COVID-19, whether all the people have taken virus, booster shot, all that I have to report as an auditor. Everything and anything they'll put on my head as an auditor. I have to report all this. Okay. They'll put, if they want, they'll put. Any nonsense, they'll put. Okay. Every auditor shall comply with the auditing standards. Thank you, Ji. Thanks for informing me that there is an auditing standard. Fantastic. We are the members of the Institute of Chartered Accountants. You mean to say, we don't know about auditing standards, we don't know about complying. Anyway, they made it mandatory. Thank you. So auditing standards are now mandatory. It has to be complied with. The central government may prescribe the standards of auditing or any addendum thereto as recommended by the ICI in consultation with the NFRA. Okay. It's further provided that until any auditing standards are notified by the NFRA, of course, the ICI standard will be deemed to be the auditing standard. Where else will you go? Yeah? Where else will you go? Seriously, how these guys are going to come out with the auditing standards, God only knows. Because I don't want to go there again and again. Again, to give the example, medical professional. You are judging a doctor, then you should be an expert doctor yourself. Otherwise, who are you to judge him? Now, CARO 2016. Again, recently CARO has been amended again. Okay. So I'm not covering this. 143.11 is the genesis for CARO. The company's auditors report order has its birth in 143.11, which gives the power to the central government to pass that order. Okay. For certain classes of companies. Okay. Only. I'm sure you'll be studying CARO 2016 or CARO, company's auditors report order in auditing. Again, CARO was amended 2020. Okay, was made applicable for the financial year 1920 onwards. It was subsequently amended for the deferment of, because of, as usual, pandemic, blah, blah. And further it has been deferred. I think now it has become mandatory. The CARO 2021, it has now become mandatory from 22 onwards. Okay. It was further deferred from financial year 2021 to 21-22. So 22 March accounts, you have to comply with CARO 2020. Some further changes are there, not relevant for company law paper, but very relevant for auditing paper. In auditing paper, you will read it fully. Line by line, you should know CARO. We also come now to another section where newly introduced section. Do you notice 143 is such a huge section? Such a huge, 12 subsections, 143. One single subsection going, so section going for so many subsections. Yeah, I can understand that, this is more dry theory, so nobody is having any doubts, etc. Let's not bother. So, notwithstanding anything contained in this section, if an auditor of a company, in the course of the performance of his duties as auditor, has reason to believe that an offence involving fraud, which involves or is expected to involve individually an amount of rupees 1 crore or above, is being or has been committed against the company by officers or employees. Is being or has been committed against the company by officers or employees, he shall immediately report the matter to the central government within such time and such manner as may be prescribed. So, remember, to whom is he reporting? To the central government. About who? About fraud committed by employees of the company against the company. Who is the company? Go back to my, I'm sure I gave you this who is the company definition. Okay. Who is the company? The company is the majority of its shareholders. We studied it in management and administration. The word company here is not managing director or board of directors. The company is the majority of its shareholders passing a resolution. So to that body of shareholders, a fraud has been committed by officers, which could include your MD also. Please understand, this is the real serious provision where the MD is committing a fraud against the company. Your loyalty should be with the company and not with the MD. Please understand. So you have to report to the central government, and where the fraud involved is an amount of 1 crore or above. In case of fraud less than 1 crore, then you should report it to the audit committee. Okay. That is why audit committee is very important. MD cannot sit in the audit committee. MD cannot sit in the audit committee. Okay. So the audit committee will consider it. See, in advanced countries like European countries and Scandinavia, US for that matter, UK, the audit committee is a very powerful body. They can take a lot of action against the MD. MD is a sort of a reporting to the audit committee in some cases on audit matters. And ultimately, there's a chairman of the board. He has a lot of power. So the audit committee chairman can report to the chairman of the board. Or sometimes the chairman of the board will be the audit committee chairman. In which case, the MD has to answer to the chairman in the board. Okay. Of course, finally, the board will take a decision. Which is why in India, we have this unfortunate thing where family-owned companies, even large listed companies are family-owned, where the father and two brothers will be holding 60% of the shares. In those cases, who is chairman, who is board, who is MD, who is answerable to who? Whereas in US and other foreign, European and developed countries, professional management is there. Who are then reporting to the chairman, who is again a professional, not family. Okay. So in those cases, yes, you can know this. So duty to report fraud up 1 crore and above to the central government, less than 1 crore. Fraud is committed against the company by officers and employees. Compare this with CARO. In CARO, you are supposed to report whether any fraud has been committed either by or against the company. By the company also, even the company itself. But again, company has no brain to think how it can commit fraud. It's again the officers or employees who are committing the fraud. And that has to be reported. So, once you come to know about it, you should report to the board within 2 days of his knowledge, seeking reply within 45 days. Once the reply is received, he has to send both along with the comments within 15 days of such receipt. In case he has not got it, then on the expiry of the 45 days, He has to send it to the central government, etc. Okay. The report shall be sent to the MCA secretary, the secretary to the Ministry of Cabinet Affairs in a sealed cover with RPAD, so to prove that I have sent it. And the report shall be on the letterhead of the auditor and be signed by the auditor with his seal and shall indicate his membership number. The report shall be in the form of statement as specified in Form ADT 4. The idea is they are putting it so that tomorrow, suppose a fraud is discovered and an auditor has not reported under 143.12, that itself becomes an offense. So the idea is another Satyam. Again, Satyam. They're worried about Satyam. So tomorrow the auditor cannot say, there's no need for me to report. Now they are saying, look here, under 143.12, you should have reported. Why you have not reported? What has to be reported? The manner of disclosure, the nature of the fraud with description, the approximate amount involved, and parties involved. Matter to be reported to board by the auditor if fraud less than the specified amount. Any matter of fraud, the board has to disclose it. The nature of fraud, approximate amount involved, parties involved if remedial action not taken, and remedial actions taken. See, without naming the bank, a private sector bank had a huge fraud done on it. In terms of bogus loans were issued through computer to people, then that money was siphoned out, and the total value of the fraud at that time was about 9.5 crores. But the size of the bank was so huge that 9.5 crores was nothing for them. And they didn't. But at that time, this disclosure was not there. But now you have to disclose it. See, because the minute it is there, for them 9.5 crores was nothing. See the size of that bank. They know that there is a fraud, the vigilance has reported, action has been taken, some is not taken. They are not reporting. They are 9.5 crores, what is there? Like that. For them, the turnover size, profit size, asset size, this is nothing. According to them. But now, no. It has to be reported. Such and such a fraud was committed by employees collusively. Like that. They have reported. And it has been now corrected. Criminal action has been taken against the persons. Now, normally auditors are bound to maintain confidentiality. When somebody is asking me for some information about my client, I'm not supposed to give it to any person other than the client. And here the client is shareholder and board of directors. So my records are confidential. My audit is confidential. I cannot reveal anything to any other than the client. Okay. But exception, auditor reports a fraud in good faith, then that will not be amounting to contravention of the duty. That's what they are trying to say. So when you are reporting a fraud, there is no confidentiality violation, provided it is in accordance with this section, subsection 1. You are reporting to the central government, etc. Then it may be leaked and that matter may be going to the press and all. You are not liable for lack of confidentiality because you only did your duty under 143.12 of reporting to the central government or the audit committee. Okay. In the case of a government company, some special provisions are there for audit. Okay, as you know, the auditor of a government company is appointed by C&AG, Control Auditor General. Okay, where the government company or a company owned or controlled directly or indirectly by central government or any state government, etc., the CAG shall appoint the auditor under section 139(5) or 7. We already saw that. And direct such audit the manner in which the accounts of the government company are required to be audited, and thereupon the auditor so appointed shall submit a copy of the audit report to the CAG. Okay. So we already saw this, right? Where either central government is holding or state government is holding or any combination are holding government company or subsidiary of a government company, only CAG can appoint. We already saw this. Now the audit report of a government company should include, in addition to the normal matters, in addition to that if there are any special directions given by CAG, that has to be the action taken and its impact on the accounts. What happens is CAG, in addition to the regular audit, will also ask the auditor of a government company to give a proprietary audit report, where not only will be comment whether that is actually incurred and proof is there, but also whether it is justified. Now, once the audit report is received, the CAG will conduct a special audit, a supplementary audit. In addition to the audit, they will come within 60 days. They may have they have the right to have a supplementary audit. Sometimes they might give a clean sheet. Once you submit the report to the C&AG, the C&AG will go through it and say, okay, chalo, clean sheet, go. Okay. Otherwise, they might come conduct a supplementary audit and ask them to give a special report. Okay. That supplementary audit report, comment, etc., will also be included in the AGM of the papers. And finally, the accounts will be approved by the members. So the government company or company controlled by state government or central government, the CAG may, if he considers necessary, order a test audit to be conducted without prejudice. So supplementary audit is conducted by the auditor himself or such person as may be authorized. Usually they will authorize the auditor himself to do it and report. Otherwise somebody else. Okay. In addition to that, the C&AG may conduct a test audit. Okay. Remember, C&AG is the government's auditor. They audit the government of India. All revenue departments are audited and all expense departments are audited. C&AG they are the government's auditor. Whereas government companies are companies under the Companies Act. So they are audited by chartered accountant only. In addition to that, C&AG can conduct a test audit and report. Right? This is without prejudice to the provisions related to audit and auditors. That is why auditing a government company, you have to be very, very careful. Because once you have conducted the audit and come out, if they go and discover something, you are in deep shit. They will take action against you. So before you file this, you have to see 100 times whether there's any issue there. Even proprietary issues, you have to see whether the decision taken are in accordance with the policy. You have to go through the policy of the ministry and then ensure that the decision taken are in accordance with the policy. You can't simply vouch and go. See what is the policy, whether this is in accordance with that policy. For which, there will be a justification note. The officer giving the direction would have, in the order sheet, they would have justified it. They would have given the justification note. It will be put up. Then it will be verified and accepted. One more level, it will be signed. Then only the action comes. So sign off. That is why it's called a bureaucracy. It is a rule of tables. Where from table to table it will move. But all that is important because they are dealing with public money. Therefore, at every level it has to be approved, come back, and you have to verify that process. Whether it has been correctly approved at every level, justification has been there, and then only given. Where there is a branch office in India, it shall be either audited by the company's auditor or any other person qualified for appointment as an auditor of the company. I already told this. The statutory auditor may not be able to visit all the branches. Therefore, he may not have the manpower. So they can have somebody else. So long as that person is also a qualified chartered accountant. I'm saying qualified chartered accountant, a chartered accountant, member of the Institute of Chartered Accountants of India. Because only he is qualified as of today to appoint to be an auditor of a company under section 139. If the branch office is outside India, then you can have the accounts audited either by the company's auditor or by an accountant or another person who is qualified to act as an auditor of the accounts in that country. For example, if you are Australia, then he should be a member of the Australian Institute, like that. Branch auditor. The duties and powers of the company's auditor with reference to the audit of the branch shall be as contained in 143(1) to 4. That is, the company's auditor is also responsible for the branch. His report will include the branch report also. It will be subsumed. The branch auditor will prepare a report examined by him and send it to the auditor of the company, who shall deal with it in his report in such manner as he considers necessary. This is what you found in the audit report. He is saying, I have received the report of the branch auditor, which has been dealt with in my report. Okay. So if something serious comes up, then he might want to qualify based on the branch auditor's report. Or if he may also go and verify. The provisions regarding reporting of fraud by the auditor shall also extend to the branch auditor, to that with respect to the branch. Suppose the branch auditor comes out with the fraud at the branch level, he also has a duty to report fraud under 143(12). other provisions, the provisions of this section will apply to cost auditor and secretarial auditor also. That is, the duties of a statutory auditor, mutatis mutandis, means with such changes will apply to cost auditor and secretarial auditor also. Okay. From now on, we can go a little fast. If any cost auditor, means statutory auditor, cost accountant, or company secretary in practice does not comply with the provisions of subsection 12, reporting fraud, then he shall, in case of a listed company, be liable to 5 lakh penalty. Any other company, 1 lakh. Okay? They have changed it. What I am now giving is the correct one. It is the duty of the auditor to sign the audit report, etc. I already mentioned about signing, why it's so important to keep a copy, signed copy, etc. The qualifications, observations, or comments on financial transactions which have any adverse effect on functioning of the company shall be read before the company in general meeting. Now, 146, very important. The auditor shall be entitled to receive all notices of and other communications relating to any general meeting. This could be a problem in the exam. How? The company secretary of ABC Limited has not sent the notice for an extraordinary general meeting to the auditor. The auditor says, demands the notice, and the company secretary says it is not necessary because it does not have any financial matters discussed. It has no concern for the auditor. Can the company secretary say that? No, because the auditor shall be entitled to receive all notices of to any general meeting. He can attend. Okay. Now be careful. The auditor shall, unless otherwise exempted by the company, attend either by himself or through his authorized representative, who shall also be qualified to be an auditor, any general meeting. So, he shall. The word used is shall. So, it's a double-edged sword now. I am entitled to receive and I shall attend unless I am exempted. So, usually what we do is when we get the notice from the company, we immediately send a mail asking them to confirm. Dear Mr. Sir, you are exempted. Don't worry. You need not come. You know the subject matter. It has nothing to do with you. But sometimes I can attend. In case I have to attend, I want to attend, I may not go. I can send a qualified person, assistant. So we have somebody who is a chartered accountant in our firm, who is an employee. I can send them or my partner as my authorized representative. But shall is very, very important, especially annual general meeting. It's shall. It's a mandatory provision. You have to attend. If you cannot go, then you have to send somebody. But if you want, you can take exemption from the company because you're abroad or something. AGM is there. I tell, sir, I'm abroad. I may not be able to come. You want me to send somebody? No, Mr. Srikanth, we'll manage. It's not important. And sometimes they'll say, no, Srikanth, I want you there to answer the queries. Then either I'll have to go or I will send somebody equally qualified. The auditor shall have right to be heard at such meeting on any part of the business which concerns him as the auditor. Please note, you cannot go there and poke your nose in anything and everything. When the discussion relates to you as an auditor, concerns you as an auditor, then you have the right to be heard at that meeting. Okay. This is a very interesting section. I thought I will alert you to the possibility of a 2-mark question in the exam. Sir, don't underestimate 2 marks, sir. For it may be the clincher for getting above 50 in all the subjects or rank, etc. The 2 marks will make a big difference. If there is any contravention of 147.1, if there is any contravention of 139 to 146, complete 139 to 146, there is a company who is liable to fine of 25,000 to 5 lakhs, officers 10,000 to 1 lakh. Earlier there was imprisonment, which has now been removed. Any contravention, 139 to 146, wherever there is a duty on the company to do something and they have not done it, or they are not supposed to do something and they have done it, then 139, 146, there is a punishment. Where the auditor contravenes 139, 144, 145. Okay, especially 144. 139 completely, 144 prohibited service, 145. If he contravenes, then if he does it unknowingly, then also there is a fine of 25,000 to 5 lakhs or 4 times the remuneration. So our Satyam auditor's only defense is, I did it unknowingly, I am not aware, like that, which is, I don't know how far it is. When he is doing it knowingly or willfully, then imprisonment up to 1 year and fine of 50,000 to 25 lakhs or 8 times the remuneration. Okay. If the conviction is there, means, see, criminal proceedings are there. He is convicted, then the entire remuneration should be refunded, and he also has to pay damages to the company and to anybody who has suffered loss. Because somebody relied on his report and invested in that company, right? Now the price has fallen because the false certification. He has to pay a huge amount. That's it. You have to fold and that's it. He has to commit suicide. That's all. Which is, let it be a warning. Just to keep this slide with you. And whenever you want to, somebody is promising you some money and asking you to do some, help, support by signing on, be careful. This is the punishment and it's not a good idea. Yes. So today I wanted to complete the topic and I think I'm going to complete it. The company is a majority of its members passing a resolution. Beautiful. Thank you, Ayush. Thank you. Members of the company. You have understood it. I'm so happy. Members of the company. Beautiful. A very good question, Pooja. In fact, I myself not knowing. See, you are asking a very good question. Where the fraud is less than 1 crore, where the fraud is less than 1 crore, you are saying report to the audit committee. Suppose the company does not require audit committee, whom to go to? Board of directors, that's all. You have to report it to the board. That's my answer, straight away. But again, board may have a vested interest. But then audit committee also see. So basically, where there is no audit, it has to go to the board. That is not given in the law. There's no clarity here. Again, I'm using something which is called common sense and answering. But if you want exact, sir, show me in the book, show me in the section, I don't have. Okay. But logic is, audit committee is not there, report to the board. But that's not audit. It doesn't serve the purpose, but there's no other go. It's a good question, but maybe I wish the ministry or somebody is hearing this and they will either amend the rules or they will amend the law. They can't because they are not parliament. Yeah, they can always add a circular or something and they can do anything they want. They can add one more rule and they can say. Government auditor and statutory auditor. See, don't say government auditor. Government auditor is central C&AG. Auditor of a government company is also the statutory auditor. The statutory auditor. But government auditor, there's nothing like that. The C&AG is the auditor of the government of India. Okay. Why would the auditor be exempted for? I don't attend all the AGMs of all the companies where I am auditor. Yeah, then I will only be attending AGMs. They'll go mad. So I will write to my people will write to them saying, sir, we have received the notice. As Mr. Srikanth is unavoidably, invariably Srikanth will be unavoidably out of station because half the time I'm traveling. As unavoidably out of station, he may be exempted from attending or he may be exempted. Or else I will designate one of my partners or qualified to go and authorize him. Just go sit and come. Just show your head and come down. So that is why. Unless the matter is very important and I have to report, then I will go. Otherwise, I won't. See, our cases all, I'm telling you, we choose our clients so carefully. We are so choosy about who is our client. Believe me. Okay, so 100 times I confirm that this fellow is worthy of becoming a member of my client. The reason is I already have a portfolio of very, very, shall we say, transparent clients who are having high corporate governance. Now, when I'm taking a new client, I have to be very careful because the quality of my audit practice, the quality of my practice is known not by the clients that I have, but by the clients I choose not to have. That is how my quality is built. One bad apple will spoil everybody. I have to be very, very careful about it. This is, maybe you are all too young to understand what I'm saying, but as you grow in the profession, remember this message coming from an old man. Be careful about who you take as a client. Automatically, your practice will be very, very ethical and successful. Because at the threshold level, you have to decide whether this fellow is worth even smallest sniff of some nonsense. No, avoid. Okay. That way, you will be safe for a lifetime. You will never have to fear about unethical behavior. Okay, you also found it in the law, then great. Common sense and law for once have coincided. Rarely, the Ministry of Corporate Affairs and common sense will rarely coincide. This is one case where it has coincided. Okay, good. Okay, now we come to the last topic of this session on auditors, which I hopefully will be able to complete before 9:30 or 9:40 maximum. Just bear with me for another 10 minutes, we'll close. The central government may prescribe maintenance of particulars relating to the utilization of material or labor or to other items of cost as may be prescribed. So what central government does is, they industry by industry, they have prescribed maintenance of cost records. So first thing, that industry, not company, industry. So you may be a conglomerate company where one of your divisions may be in that industry. If so, for that division, maintenance of cost record is compulsory. For example, you might be having sugar plants, you might be having cement plant. Cement plant cost accounting separate, sugar. Both of it cost accounting is compulsory. So they have to maintain cost records first. See, again, when we say cost records, what we mean is particulars relating to utilization of material, labor, overheads, etc. So separately analyzed and kept. That's a cost information system. This shall also be included in the books of account maintained under 128. Okay, the central government. So before issuing the order, making it compulsory, okay, consult the regulatory body constituted or established under such special act. So electricity companies, they may consult the electricity boards and ask, do you want to bring it compulsory? The energy is now, a cost audit is needed. See, the idea behind cost audit is, see, financial, you know that already, I don't have to waste your time. Financial audit is a stewardship audit. I am only reporting to the shareholders saying, profit is so much, assets are so much, everything is safe, internal controls are good. Guy. I am not going beyond that whether this company is being operated efficiently by the board. I am not getting into operational efficiency at all. I am not getting into whether you have got value for your money. No. That will be governed in cost audit. Whether material, labor, etc. are being incurred at the optimal cost, whether overheads are maintained, cost control is there. All that will be done in the cost audit. It's a very specialized activity. Of course, again, chartered accountant perfectly capable of conducting cost audit. We are also experts in cost audit, because we also study costing. Some of us are, like I am a management accountant. So there is no need, I'm not a cost accountant from the institute, but I am a management accountant from our institute. We have a post-qualification diploma called management accounting, where we are doing equally, but they are specialized. The members of the Institute of Cost Accountants of India, which earlier called Cost and Works Accountant, are experts in that field. Specialists. They do more of it. Therefore, they are good. So the classes of companies for which maintenance of cost record is prescribed is contained in Rule 3 of the company's cost audit rules, cost accounting records and audit rules. Out of those companies required to maintain cost records, such companies covered by Rule 4 shall have mandatory cost audit. So first of all, cost record should become mandatory for you, for that industry or for that division or whatever for you. Then only mandatory cost audit will come. Okay. Now, of course, earlier, you will not believe, there was cost audit in 56 law also. Earlier, when cost audit was made mandatory for companies, there were not enough cost auditors. Sorry to say this. Practicing cost accountants were not there. They were all in employment. So till such time, who will do the cost audit, Baba? We can't wait for the cost accountants to come. So we chartered accountants are doing cost audit also. In fact, the 56 law had a provision that provided that until sufficient number of cost accountants are available, a member of the Institute of Chartered Accountants of India can conduct the cost audit. Even today, I know this may sound very jingoistic and chauvinistic and arrogant of a chartered accountant, but then I take a lot of pride in the fact that I'm a member of the Institute of Chartered Accountants of India. I mean, it may sound as my behavior itself that this guy is always making a big thing out of CA, that CA is the top. Yeah, why should I not? I struggled hard to become a member of this institute, yeah. And I will be proud of the membership of the institute. No doubt about it. And there was a section, you don't believe me, verify the 1956 Act, there was a provision provided that until cost accountants are, because the reason was that there were no practicing cost accountants, very few, 1 or 2 were there. The rest of them were all employees. Then slowly, when the central government started increasing the mandatory cost audit requirement, more companies came into the net. Now they saw opportunity, and many of them are now available, even though there are very few. Okay, but they are enough for conducting cost audit. And that institute is slowly developing its muscles and coming up and all. Let's hope. We'll support them. See, we are all, I'm not saying they are, we will support them. We will support cost accountant, we will support company secretary. But we will always remember who we are. We are the members of the Institute of Chartered Accountants of India, 1949. Let's not ever forget that. So, cost records to be maintained by companies where turnover is not less than rupees 35 crores. Okay. Cost records to be maintained by companies where the turnover is not less than 35 crores. If it is less than 35 crores, no need for cost records, even in that industry. Out of this group, that is mandatory cost record, turnover not less than 35 crores, out of this group, the following companies shall have mandatory cost audit. There are two types of categories, regulated sector and non-regulated sector. Post 91, regulated sector is slowly coming down. For example, sugar is still there, cement is out, and energy is there, as I told you, electricity, regulated, where everything is monitored by the government. So, regulated sector. So, the regulated sector, the overall annual turnover from all products and services during immediately preceding financial year is greater than or equal to 50 crores. Okay? All products. So, means the company may not produce only this product. Yeah. As I told you, it may have many divisions. So, all divisions put together, all products and services together, greater than or equal to 50 crore, and both conditions to be satisfied. And the aggregate turnover of this division, this particular product is above greater than or equal to 25 crore. Okay. You got it? So, overall 50 crore and above turnover, all products and services for this particular product or service, greater than or equal to 25 crores. For non-regulated, overall annual turnover from all products and services, 100 crore. And aggregate turnover for this particular activity, greater than or equal to 35 crore. You will be able to remember 50, 25, 100, 35. So, we also verify, because when I am statutory auditor, I will first of all verify whether mandatory cost audit is there. If so, I will advise the company immediately. So, please appoint a cost accountant to audit your company. Cost audit shall be conducted by a cost accountant. Fantastic. Congratulations. Finally, this institute is now capable of doing it on its own without having chartered accountants also to come and do it. So, the cost audit shall, of course, one important thing, you may be a member in those days when statutory audit, when the chartered accountant could do it, he cannot be statutory auditor. Got it? The auditor of the company cannot be cost auditor. Just like auditor cannot be internal auditor, auditor cannot be cost auditor. Even though he may be qualified as a cost accountant, he cannot be. He should be a member in practice, the cost accountant in practice. Okay, who shall be appointed by the board on such remuneration as may be determined. The cost auditor should comply with the cost auditing standards which are issued by the Institute of Cost Accountants of India. Okay. Again, where there is an audit committee, the audit committee will appoint. Okay, the recommendation by the audit committee. Where there is no audit committee, the board has to appoint. Okay, where there is an audit committee, in both cases, the board will appoint. But where there is an audit committee, the audit committee will recommend. Okay, the remuneration will be recommended by the audit committee and approved by the board. So, technically here, unlike, statutory auditor, the fee is fixed by the members in general meeting or delegated to the directors. Here, members will only ratify the remuneration. It will be fixed by the audit committee by negotiating with the cost auditor, and it will be approved by the directors, the board of directors. Where the company does not have an audit committee, the board only will appoint, the board will fix the remuneration, which will be ratified by the shareholders subsequently. Right? Slight difference. When you are looking at difference between cost auditor and auditing, cost auditor is appointed. See, there is an elaborate procedure for cost audit. The audit conducted under 148 is in addition to 143. The qualifications, disqualifications, rights, duties, and obligations applicable to auditors, that is the company auditor, will apply to cost auditor also. Okay, as far as may be. All of that, including not holding shares, relative, etc., completely what all you saw there will apply here. And like the cost regular statutory auditor, the cost auditor also should be given all assistance, etc., etc. Now, the cost auditor will submit his report to the board of directors. Okay. Then the company will furnish the cost audit report to the central government within 30 days. So this is one more important. The cost auditor will submit his report to the board. Again, you see, the statutory auditor reports to the shareholders, whereas the cost auditor gives his report to the board to be forwarded to the central government. And if the cost auditor is giving any reservation or qualification, the explanation or information should be given. Usually what they see, the cost audit report is very elaborate. That's a separate subject by itself. I mean, if you those of you who are studying to become a cost accountant, may be reading the cost audit report in detail. It's a very beautiful document where completely you have to answer whether the costing system is there, how it is working, everything. If you give any negative comment, that has to be answered by the board. And the central government in turn may call for further informational explanation, which should be furnished by the company within the time prescribed. Then when all this football is over, the report will be closed. The central government will close the report and give a no problem. Then in the meantime, next audit, next year will come. So if you're going to be employed as a CFO of a large company, believe me, you will have statutory audit, you will have internal audit, you will have cost audit, you will have stock audit by the bank. You should have one person only handling audit, reporting to you. It will be a headache. So many audits. If any default is made in appointing, if you don't appoint or don't give assistance, the company and every officer, same penalty as 147.1. Remember? 139 to 146, 147.1, same penalty. If the cost auditor has given false or concealed anything in his report, then he shall be liable 147.2 to 4. So, with this, we have completed the topic on audit and auditors. Okay. I know the last part of it was a little monotonous and boring. Thank you for being a good audience. Let's see if you have any questions and then I close. A person who is both cost accountant and CA, sir, you should be a member of the Institute of Cost Accountants and you should be a cost accountant in practice. Should be holding a certificate of practice. Yeah. A person who is both cost accountant and CA, then also you appointed as, sir, if I am practicing as a chartered accountant, I cannot be appointed as cost auditor. Okay. No, if I am practicing as a, I don't know, sir, actually, honestly, because earlier there was a prohibition. I cannot be the statutory auditor and the cost auditor. Now, your question is, I think I've understood your question correctly. You are a practicing chartered accountant. Whether you can be, you are also a cost accountant. So you should be a member of the Institute of Cost Accountants of India. Whether you can be appointed as cost auditor, you can. As a cost accountant, you can. But I don't know because they have not said practicing cost accountant in practice. But you should have a COP as a cost accountant. Okay. Now the problem is, if you want to hold a COP as a cost accountant, if you want to hold a, member and practicing member are totally different. Once you get the membership of the institute, you are a member. I told you now, first I got a membership from the institute. If you see the date of membership, it will be earlier than COP date. Whereas my certificate of practice was applied sometime in late July. And I got it in August or September. August only I got it. So that is my certificate of practice. In addition, I pay 2 fees, Baba. I pay one membership fee and one COP fee for maintaining my COP. So if you want to be a member of the, if you want to be a practicing member of our institute, you cannot also practice as a cost accountant. If you are not a practicing cost accountant, you cannot be appointed as a cost auditor. So therefore, mutually exclusive. If you are practicing here, you can't be there. For example, I am a company secretary. I cannot hold a COP as a company secretary because I am practicing chartered accountant. Okay, though I cannot be a practicing company secretary. Okay, if I am, then I am not full-time practice here. And that is more important for me. So, boss, cost accounting and all, not a great thing here. Don't worry about it. You're not losing much. Unless you want to specialize, then don't, even if you're a chartered accountant, become a practicing member of Costing Institute and become a big shot there. Take up only high, profile costing assignments of large companies. And that's a very specialized area. There are people there. You can aspire to be like that. In which case, CA is only add-on. It will be the cost accounting qualification that will be valuable to you. You can also do internal audit. According to me, in my humble view, while I have been speaking so highly about chartered accountants and all, I should be fair to my brethren in the Institute of Cost Accountants. For internal audit and operational audit, A cost accountant is far superior to a chartered accountant for internal and operation, because many of them have worked in large companies and they know in and out of operations and they are technologically savvy also. Many cost accountants are also engineers. I don't know if you know this. Many engineers, in addition to engineering, they do cost accounting. So because that helps them in financial knowledge of the process. And I know a lot of cost accountants who are basic qualification, not BCom. It is BE. So it's like that. It's up to you. And if you should have a passion for cost accounting, then you would like to specialize there, you can go. Okay. But in this chapter, the most important topics: disqualification, okay, appointment, cooling period, rotation of auditors, removal, any type of removal, resignation. The complete resignation removal is very, very important. These are the important topics from the exam point of view, or from, why is it important from exam? Because the institute feels this is very important for our students and they should not be ignorant. So they keep asking. Then that becomes important from the exam. So try to think from the perspective of a professional. And automatically you will remember. Fantastic. Also, this limits for the cost audit, you should remember. This slide, is very important. Because they may ask you a question whether mandatory cost audit is needed or not. I keep answering this question every time. Most of my clients, every year we analyze whether they come in that category, whether cost audit is compulsory. If so, I'll be the first person to inform the board. Please appoint a cost auditor. Fantastic. I thank you for a wonderful support and great participation in the session through your queries and questions. Looking forward to meeting you again on Saturday when we'll take up the Indian Contract Act. Till then, I wish you all the very best. Bye. So class over, sir.